Right. If possible, try to use the main chat box, right? When you try to text me individually, it's quite difficult for me to toggle between each of you and to reply you. It would be nice if you can use the main chat box, right? Unless you are communicating something that you feel should be communicated in private, right? Other than that, anything that you blurt out, you can use the main chat box to clear things out, okay? Right. And also the second thing, I owe you an apology. The reason why I owe you an apology, because we just actually planned everything in the nick of the time. Yesterday, I posted the poster. I published the poster. Many of you joined the group then and there. And then actually today morning, I gave the team the task to prepare the paper. So we actually had a bit of a delay in giving you the paper. Hope that doesn't happen the next week. Probably you'll get the paper in Thursday. Probably you'll get the paper on Thursday. You can keep it done in advance whenever that you have free time, and you can join the discussion from next week on time without having any hassles at the last minute paper being uploaded. Okay. I don't know how many of you attempted the paper. Let's get started without wasting any time. One more thing to say, guys. Here, if you are joining this session, I'm assuming that you are pretty good at the basics, okay? Because we are not starting from ABC. That's point number one. Okay, we are not going to do those basic asset equity liability questions. I would probably be doing some questions which is actually at a moderate level or pretty much of a hard level MCQs. Okay, I assume you guys are good at the basics. I assume you know the fundamentals of accounting. I also assume you would have covered almost 90% of the syllabus by now. Whether you come to my classes or go to someone else's classes, no problem. I assume by now you should have completed about 90% of the syllabus. That's point number one. Point number two, I also assume that you must be good with the basics, right? If you are not good at the basics, trust me, this class is going to be pretty much haunting. It's going to be a little bit of a gray area session, right? So assuming and keeping that in mind, let's get started with the paper. Okay, righto. Hajar, when something is free, obviously, no doubts in it. Okay, right. Question number one. A part of inventory damage completely due to fire caught on 2021 3/31st. So there was a fire happening. When is it happening? It's actually happening on 2021 3/31st. Right, at a warehouse. The cost value of the inventory recovered on this date was 150,000. Guess what happens? On 2021 3/31st, a fire takes place and not the entire set of inventories are being damaged. That's the point that you need to understand, right? What do they tell you? They're saying part of the inventory is damaged. Another part of the inventory is recovered. Okay. So there is 150,000 worth of inventory that was completely recovered without any damage. The following information is provided for the year ended 2021 3/31st. They've given us the opening stock. They've given us the purchase. They've given us the storage expenses. Sales return is given, and then sales is given, right? And what do they tell us? This business sells goods by adding 25% profit on cost. So it's evident that they are using markup. What profit technique are they using? They are using the technique markup. Normally, there are two techniques, right? Margin and markup. Which one do they use? They use markup. Point number two. Insurance company agreed to pay 80% of the cost of the goods damaged. Right. So out of the total damage, insurance company is promising to pay us 80%. Right. And then net realizable value of the goods recovered is 130,000. Perfect. Now, what are they asking for? What is the cost value of the goods damaged on 2021 3/31st? And then they're also asking for the total expenses in relation to inventory, profit for the period. Right. How do you do this question? With the data given, it's pretty obvious. With the data given, it's pretty obvious that we need to roughly draw the income statement. Okay, you don't need to get the perfect income statement out there, guys. This is an MCQ, right? So be quick. That's very important. Okay, time management is key, right? So we are going to have sales. From sales, we minus the cost of sales. We got the opening inventory. To the opening and inventory, what do? We add the purchase, right? And then we minus the closing inventory. What do we get? We get the gross profit. And then from the gross profit, I can directly minus the expenses because they haven't given us any other income. So let's not waste time. We'll minus the expenses. What are we going to get? We are going to get the net profit. Now, guys, look. What are the things that they are requiring from us? First things first, they want us to find out the net profit. So we got to find these out, right? And they also want us to find out the inventory related cost. On top of that, they want us to find out the cost of the goods damage. They want us to find out the cost of the goods damage. Right. Now let's start plotting the figures given on the question. They've given us some data, right? They've actually given us some figures. Guess what we are supposed to do? We should start plotting those figures. We should start marking those figures one by one, right? Okay. First, what have they given us? They have given us the opening stock, purchase, storage expense, sales return, and sales, right? So now let me net off the sales return from sales and get the final value. So if I set off the sales return from the sales, I get 1,500. What is this? This is my net sales, right? So let me record the net sales here. It's 1,500. 1,500 is the net sales, right? Then they've given us the opening inventory. Opening inventory given is 450K, okay? They also have given us the purchase 1,350. Good. Right. Opening stock is recorded. Purchase is recorded. Okay. Sales and sales return was given separately. I net it off and I took the net sales 1,500. Now we got the storage expense, right? We've got the storage expense coming up, right? So storage expense, how much is it? It's 100. Storage expense, how much is it? It's 100. Answer me, where do you record the storage expense? Yes. Where do you record the storage expense? Use the main chat box, please. Where would you record the storage expense? I'll give you like two options. Will you minus the storage expense from the sales? Would you record that under purchase or would you record that under expenses? Of course. Where are you going to record it? You're going to record that under expenses. Where are you going to record it? You're going to actually record that under expenses. Why though? Because storage expense is clearly selling and distribution cost. Storage expense is clearly selling and distribution cost because after preparing the goods, after preparing the finished goods, what would you do? You would store it until the customer comes and take it. So that's clearly selling and distribution. So we have a storage expense coming up. How much is it? The storage expense given is 100. Perfect. Now, first thing that I want all of you to understand is this. Listen. They are telling inventory at the end was damaged. They are telling inventories at the end was damaged. Okay. So obviously the closing inventory is damaged. But guess what? It's not the entire set of closing inventory that is damaged. Actually, it's part of the inventory that is damaged. Okay. So in the closing inventory, there is a set of inventory recovered. After the fire, we went and checked the warehouse. When we went and checked the warehouse, there was a set of inventory left at the warehouse and it was not caught with the fire. It was in perfect condition. It was not damaged. Thank God. Thank God for that. Right. The value of the inventory recovered, how much is it? The value of the inventory recovered, up there they are saying the cost value of the inventory recovered is how much? 150. 50. So there is 150,000 worth of inventory recovered. Okay. Then the next part of the inventory is what that got damaged. Did you understand? I hope that's clear, right? So there is a total amount of closing inventory given as an X factor. We should find that out. Out of that, 150 is recovered. Closing inventories were damaged. Out of that, 150 is recovered. The remaining amount is actually damaged. That's what we are supposed to find out. That's what we are supposed to find out. So when you read the question, you should pay attention to the data given, and you should also read it in the most discreet way possible. Don't try to be hasty, especially when you read the question. You might fall prey to mistakes. Point number one, right? The closing inventories are damaged. Inventories as of 31st March 2021 were caught on fire. Not all the inventory is part of the inventory. So out of the total closing inventory, 150 was recovered. The other set, I have to find that out. Okay. So to figure this out, to figure this damage inventory out, to find this out, I need the closing inventory first. To find the closing inventory, I need the cost of sales. To find out the cost of sales, I need the gross profit. Understood my point? Understood my point, right? I need to find the X factor, right? That part of the inventory that got damaged. To find out the part of the inventory that got damaged, I need to find out the closing inventory, right? To find out the closing inventory, I need to find out the cost of sales. To find out the cost of sales, I need to find out the gross profit. For that, what clue do they have given us? Answer me. For that, what clue do they have given us? Very good, Zuha. They've given us the clue of markup. They are saying we are using markup, right? Look here. The business sells goods by adding 25% of profit on cost. Okay. If it is markup, profit is 25%. Finish it for me. Would you treat cost as 100 or would you treat selling price as 100? Be quick. Would you treat cost as 100 or selling price as 100? Very good. Very good. It will be how much? 125%. Again, I believe you guys are good at margin and markup. I believe you are good at margin and markup, right? So point is, listen, the profit percent is 25%. We are using markup. If we are using markup, cost is 100%. If cost is 100%, cost plus profit is the selling price, right? So if cost is 100, profit is 25%, 100 plus 25, my selling price is going to be equal to 125%. Take my apologies for putting the margin first. Okay, right. Now, if 1500 is equal to 125, how much is for 100? What do I get? If 1500 is for 125, how much is for 100? I get 1200. Perfect. I get 1200. So guys, one X factor is found out. What's the X factor? The cost of sales. Now with the cost of sales, I can get the closing inventory. With the cost of sales, what can I get? I can get the closing inventory. What should I do? I should reverse process. How do you do the reverse process? You take 1200 and you deduct 1350 and you deduct the 450 as well, because we are going reverse. When we go reverse, we need to do everything right opposite. So with 1200, 1350 was added before, deduct it. 450 was added before, deduct it. If you do so, 1200 minus 1350 minus 450, what do you get? You get 600. 600 is the total amount of closing inventory we had at the end. Understood the point? 600 is the total amount of inventory we had at the end. But was the entire closing inventory damaged? No. The entire set of closing inventory wasn't damaged. Out of 600, how much is recovered? 150 is recovered. Then how much is damaged? 450 is damaged. There you go. I found out the answer to the first question. How much is it? 450. 450. Amazing. How many of you got that correct? Put a thumbs up there. Put a thumbs up there. How many of you got that one correct? Well done. Well done. Superb, superb, superb. Wow, Mumina. Well done, Afreen. Well done, Fatima, Salman, Ade. Wow, good, 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 good to know that. Right. Superb. So I think many of you got that correct. Huh? Amazing. Right. Now to the next question. What do they ask us? So the answer to the first question is, by the way, 450. Congratulations for those who got that correct. The next one. Total expense in relation to the inventory and profit for the period. Okay. We've got some more things to sort out. Listen. Now, what is the total amount of inventories damaged? 450, right? Right. Out of 450, insurance company told us, hey, look, we'll give you 80%. Hey, look, we'll give you 80% of the total loss. Take that as a compensation. So out of 450, okay, if we are going to get 80% as compensation, how much are we going to lose? How much are we going to lose? We are going to lose 20%, right? So when we lose, is that an income or expense? Is an expense, stock loss. 20% for 450, if I'm not mistaken, it's going to be 90. 20% for 450, if I'm not mistaken, how much is it? It's 90. Again, let me repeat it. Yes, 450 worth of inventories were damaged, but insurance company got our back. Insurance company barges in and the insurance company says, hey, look, you don't need to accept everything as a loss. We got you, we give you 80%, right? So out of 450, if insurance company gives us 80%, how much are we suffering? We are only suffering 20%. So out of 450, if 20% is the loss we suffer, that's going to zero it down to 90. Are we clear? Good. Well done, Zuha. Superb. Now, we got one more thing coming up. What is it? The NRV. Look at this. They're saying the net realizable value of the goods recovered is 130. Here, guys, listen to me. They are not talking about the damaged goods. They are talking about the NRV of the goods recovered, right? So this is something that you all would have learned in sole traders. We got the cost and we got the NRV, right? Cost is the price at which you bought the goods. NRV is the amount by which you can sell the goods in the future, right? What's the cost of the goods recovered? 150. What's the cost of the goods recovered? 150. What's the NRV? 130. For how much you bought it? You bought it for 150. For how much you can sell it? You can sell it for 130. Are we gaining or losing? We are losing. How much are we losing? We are losing 20,000. That's an NRV loss. And by the way, this 20,000 is an expense to be incurred in the future. This 20,000 is in fact an expense that is to be incurred in the future. Are you going to wait until the future or are you going to recognize it immediately? You would say we should recognize it immediately. Prudence concept. So out of 150, we are going to recognize 20 as NRV loss. Why? The cost is 150, but we are only able to sell it for 130 in the future. We bought it for 150. We are only able to sell it for how much? 130. So there is going to be a loss in the future. That loss has to be recorded immediately. That's another 20. There you go. Right. So now I can take my total expenses. That's going to be 100 plus 90 plus 20. That's 210. My total expense is 210. So out of 1,500, if 1,200 is deducted, we get a gross profit of 300. From the gross profit 300, if I minus 210, I get 90, which is my net profit. Okay. They're asking for the net profit, right? Profit for the period. Okay, we got 290s. So we are not lucky. Right. The next requirement, I don't want to lie. The next requirement, I honestly kept it for you. Tell me what's the total inventory related expense. Is it 1310 or 210? Type it out. Is it 1310 or 210? Okay, okay. Okay, not bad, huh? It's 1310. And yes, it is correct. It's 1310. Guess what some students do? Guess what some students do? Some students, right, get that wrong. Some students think, okay, stock loss 90, NRV loss 20. So 90 plus 20, how much is it? It's 110. Some students think it's 110. No, it's not 110. Listen, there are three expenses related to inventory. I'll show them. The main expense related to inventory is the cost of sales. So this is one. This is an expense related to inventory. And this 90 is expense related to inventory. This is the second factor. And this NRV loss also an expense related to inventory. That's the third factor. Okay, so 1200 plus 90 is 1290. 1290 plus 20 is 1310. So the expense related to inventory is going to be 1310. Okay, now some of you might be willing to ask me, sir, what about the storage cost? Don't you take the storage cost? It is also part of inventory, right? No, this 100 is related to selling. Again, I'm saying store when you sell. Storing is done when you're about to sell. Imagine you produce ice creams. After producing ice creams, what do? Until you sell those ice creams to the customers, those ice creams are going to be put on a refrigerator or in a freezer, right? So when you put those ice creams in a freezer, right, you're going to get an electricity cost. That electricity cost is basically the storage cost, right? That has got nothing to do with inventory. Therefore, your answer is going to be 1310. So your answer is fourth. Right. Tell me, guys, how many of you got that one correct? How many of you got that correct? Superi. Well done. Well done. Okay, nice. Not bad, huh? Right. Now, question number 3. The details of assets liabilities of a school development committee are as follows. What are they asking for? What is the surplus? Guys, this is a school development committee. School development committee is simply an NPO. School development committee is simply an NPO, a not-for-profit organization. That's point number 1. Right? And they're actually looking for the surplus. Surplus, in other words, is known as profit. Surplus, in other words, is known as profit. And when it comes to profit, we have actually learned two methods in which we can get the profit. The first method is where you take the income, subtract all the expenses. This will give you the profit or loss. Okay, but according to the data given, if you take a look at the data given, you cannot find the income there, neither can you find the expenses, right? So there is another method we can use. To find out the profit, and you all know, you call it the net asset method. How do you get the net asset? You take the closing equity minus the opening equity, add the drawings minus additional capital. If you do so, you'll either get the profit or loss. If you do so, what would you get? You'd either get the profit or loss. Hear me, please. Yes, the direct method of calculating the profit is to take all the income, subtract the expenses, you'll get the profit. That's the direct method. But according to this question, no data has been given regarding income and expense. So no way I can use this equation. I get in the point. No way I can use this equation. So I need to look for an alternative equation that can literally give me the same answer, right? So the alternative equation that we've all learned in chapter 2 is basically the equity method. right? How do you get that? You take the closing equity minus the opening equity at the drawing minus additional capital, right? So if you take a look at the data given, they have not directly given us the equity. They have not directly given us the equity, but what have they given? They have given the assets and liabilities. Now, cash at bank, what is it? Is an asset. Office equipment is an asset. Fixed deposit is an asset. Subscription receivable is an asset. Accrued fixed deposit interest is also an asset. Subscription received in advance is a liability. Bank loan is a liability. Now, can you find out the equity? Of course, you can find out the equity. What are you supposed to do? Add all the assets, deduct the liabilities. What would you get? You would get your equity, right? Perfect. Now, I have the opening assets. I have the opening liabilities. If I add all the opening assets and deduct the liability, what will I get? I'll get the opening equity. So it's 60 plus 1100 plus 70 minus 660. I get 570. 570 is, by the way, the opening equity. What's the closing equity? Again, you take 90 and you had the office equipment asset 900 and you had the fixed deposit 200 and you had the 120 subscription receivable and you had the fixed deposit interest accrued. So the total asset is 1325. The total amount of asset is how much? 1325. So from 1325, you minus 640. If so, what would you get? You get 685. 685 is my closing equity. Okay, right. Do they have given us drawing or additional capital? No, right? They have not given us any drawing or additional capital. So the closing equity given is 685. The opening equity given, not given, we found out was 570. No drawing was given. No additional capital was given. So 0, 0. What's your answer? 685 minus 570, you get 115,000. You get 115,000. There you go. There you go. Guys, look. Some kids, when they look at the question and the data, they go out of their mind. What happens? They go out of their mind. Are what the heck, man? They're asking for the surplus, but they haven't given us the income. They haven't given us the expense. What are we supposed to do? Right? So you get panicked. You get upset. You get nervous, right? And then the fear gets the better of you. Listen, sometime the information given might look complicating. The information given might look complicating, but the process of getting the answer is so simple. The process of getting the answer is so simple. Again, this is a technique the examiner uses. This is again a technique the examiner uses. Sometimes he might, how do I say, make the question grandiose. He'd make the question look so complicated with so much of adornments and whatnot, right? But the way of obtaining the answer would be a peanut. This is a question the likes of which resembles what I say. In other words, this is a question similar to that, right? They've given plenty of information: opening subscription receivable, closing subscription receivable, received in advance, fixed deposit, right? So they've literally dumbed you with a lot of information for you to get that fear. What the heck, man? What is this? But you see, the way of obtaining the answer is so simple. Always keep in mind, there are two ways you can find out the profit. There are actually two ways in which you can find out the profit. The first method is to take the income, subtract the expenses so that you can get the profit or loss. If no income and expense is given, then the only method that will allow you to find out the profit is basically the equity method. Okay, so you go with the equity method, you'll be able to get your answer. Guys, how many of you got this one correct? If you didn't get that correct, are we okay with that one? Are we okay with that question? Right, and very good, Kriti. Well done, Zainab. Well done, Ibrahim. Superb, Sajna. Well done, Ruqayya Riyas. Well done, Fatima. Well done, Rashida. Well done, NK, Momina, Arindu. Superb. Well done, Yahya. Well done, Nada Mirzan. Well done, Shamindi. Right. Well done, Haizam. Well done. Right. Good, good, good. Are, can we use the opening accumulated fund minus the closing accumulated fund? This is opening accumulated fund. This is closing accumulated fund. Can you remember? The equity of NPO is actually equal to the accumulated fund. The special donation and the lifetime subscription, although they are categorized under equity, are they equity? I hope you can remember. They are not equity. What are they? Answer me. Special donation and lifetime subscription. Right. They are liabilities. You call them quasi liabilities. Can you remember? Very good. Very good. Very good. Well done. Well done. Well done. Right. You call it what? Quasi liability. So always keep in mind, equity is similar to accumulated fund. So NK minusing the opening accumulated fund from the closing accumulated fund is exactly what I did. Okay. But instead of using the term accumulated fund, I use the term equity. I hope that's clear. Right? Nearby. What's the next one? Question number 4. OMG. Partnership. Okay. Guys, partnership, as I already told you many times in my classes, partnership MCQs, okay, are so time consuming. It's going to consume your entire time. Partnership MCQs are going to consume your time. Wait, who can remember? If you are given a partnership MCQ, tell me what technique did I ask you to follow? What technique did I ask you to follow? If you are doing partnership MCQs in particular, who can remember? I told you a technique. This technique can save you a lot of time. Exactly, Zuha. Very good, NK. Yes. Well done, Shamha. Well done, Rukaya. What are you supposed to do? You should add and deduct. Guys, don't waste your time drawing a capital account and current account. Right? Don't do the debits and credits. It will literally waste your time. I don't know, substantially. The best thing to do is to add and deduct. And this is a technique most of the teachers fail to use. I get in the point, right? So when it comes to right, finding out the capital account balance and current account balance, I told you, do addition and deduction, you are good to go. Right? Okay. Tell me, what are the 3 partners we got? Okay. Agil and Vimal are the partners sharing profit and losses on 3:2 basis. 3:2 is basically the old ratio. Yamil joined as a new partner on 2024-1. He invested 600,000 as capital. Good. Okay. So at the beginning, Yamil is joining, and how much is he investing? 600,000. The goodwill was evaluated on this date and adjusted through the partner's capital account. Goodwill account is not maintained in the accounting books of partnership. The agreement of Agil, Vimal and Yamil partnership is given below. Agil is entitled to an annual salary of 300,000. Okay. The only person gets a salary among these 3 people is Agil. Right. Profit and losses should be shared among Agil, Vimal and Yamil. 5:3:2. So this is, by the way, the new ratio. Good. Partners' capital and current account balances on 2023 31st are given below. These are opening balances. What are they? They are opening balances. So opening balances are there for us to record. Let's record them when the time is up. The profit share to Yamil for the period ending 2021 3/31st is 120. And the equity balance of Yamil on 2021 3/31st after profit share is 570. Right. Pay attention to this. They have given us the closing balance of equity. after the profit share of whom? Yamil. Right, that's a very important point. There is no any additional capital provided by Agil and Vimal. Partners drawing for the period ending 2021 3/31 is 200, 160 and 50 by Agil, Vimal and Yamil respectively. All these drawings were adjusted through partners' current account. Right, brilliant. Now, first things first, let's record the opening balance. What are we supposed to do? Let's record the opening balance. How many people are there? 3 people, right? Agil, Vimal and Yamil. Agil, Vimal, Yamil. Again, no debit side, no credit side. No debit, no credit. What are you going to do? You're going to add and deduct. What are you going to do? You're going to add and deduct. No debits, credits is going to waste a lot of time. Don't do that table. Useless, right? Again, Agil, Vimal and Yamil. Right. Let's record the opening balances now. Let's record the opening balances now. The opening balance of Agil is 750 in the capital account. Vimal is 650. Yamil, no. He wasn't there last year. The opening balance of the current account for Agil is 150. Vimal is 100. Okay. Yamil wasn't there. The opening balance is recorded now. The opening balance is recorded now. So guess what happens when Yamil comes in? When Yamil comes in, how much does he bring as capital? He brings 600,000, right? So if he brings 600,000, what's going to happen to Yamil's balance? Yamil's capital account balance is going to increase. So no crediting. You're not going to credit it. Instead of crediting, what are you going to do? You're going to increase it. So that will save up a lot of time. And at the same time, it's easy as well. So if Yamil was to bring, I'll say Y. If Y was to bring 600,000 cash, his capital account is going to increase. Okay. Now, Agil is entitled to an annual salary of 300,000. Okay. Salary, you might know this. You don't record it in the capital account. Where do you record it? You record it in the current account, salary. To whom are you giving it? To Agil. So Agil's current account balance increases. Agil's current account balance increases by 300. Good. Even that has been recorded now. Perfect. Now, what's the next piece of information given? Let's go one by one. I'm making sure that you are not lost. Okay. In the question. New ratio, old ratio, we can't do anything for that. Now, the profit share to Yamil for the period ending 2021 3/31 is 120. And the equity balance of Yamil on 2021 3/31 after profit share is 570. Guys, look, they did not talk about interest on capital. So no interest on capital is going to be recorded in the current account. Yes, indeed, they spoke about salary. Salary was given for whom? A. Salary was given to A. Okay. It was neither given to Y, nor was it given to W. Perfect. Then they are saying the profit share allocated to Y. The profit share allocated to Y, how much is it? It's 120. So what will happen to the current account balance of Yamil? It will go up. When there is profit, the equity will increase. Agree? Right. So Yamil's balance will increase by how much? 120. Okay, right. Now, after the profit share, Yamil's balance become how much? 570. The equity balance becomes 570. So I'm going to keep this aside and let me record the drawings now. So drawing 200, 160, 50. What do you do? Drawing decreases the equity, right? Drawing decreases the equity. Okay, how much is it? 200 goes for A, 160 goes for W, 50 goes to Y. Perfect, perfect. Now, everything has been recorded except one data. Everything has been recorded except one data. What is it? They are saying after the profit adjustment, the total equity, okay, the total equity of Yamil, the total equity of Yamil, total equity of Y is how much? It's going to be 570. Can you remember what is included in the total equity of partnership? What is included in the total equity of partnership? I hope you can remember. It's the capital account balance, the closing capital account balance, and the closing current account balance. When you add them together, what do you get? You get the total equity. Am I correct? When you add them together, you get the total equity. Right? So keep in mind, the capital account balance, current account balance, when you put them together, you get the total equity. They are saying the total equity of Y, the total equity, okay, not the current account, do not misunderstand. The total equity of Y after the profit adjustment is how much? 570. Now guys, salary to Yamil you don't give, profit to Yamil is given, drawing to Yamil is given, not given, taken, right? So drawing was taken out, profit was recorded, salary is not given to Yamil. Is there interest on capital? There is no interest on capital. There is no interest on capital. So I have literally included everything that could possibly come into current account. Of course, there are some exceptional transactions, but they haven't mentioned anything about it. If so, Yamil was not entitled to any salary. Yamil was not entitled to any interest on capital. The only thing Yamil was entitled to was the profit. Out of that 120, he took 50 now. So now I can get the closing current account balance. What's the closing current account balance? 70. Right. So you know current account plus capital account is the total equity. So this plus this was 570, right? This plus this is 570. So my capital account balance should be how much? 500, isn't it? My capital account balance should be how much? 500. Then only 500 plus 70 will become 570. Perfecto. I guess you are with me. That's a good partnership question we are doing. And look at the technique that I'm using. No debits, no credits, no T accounts, no 3 columns, no 6 columns ideally, right? Everything is added and deducted. It's easy. It's obviously easy. Perfect. Now, you know when you add the current account balance with the capital account balance, you get the closing balance. The closing balance is given 570, right? So there was a figure. With that figure, 70 was added. That's how I got 570. So after adding 70, we got 570. Then how much was there? 500 was there. Perfect. Now what are they asking for? They're asking for the goodwill. No? What are they asking for? They're asking for the goodwill. Can you remember the adjustment for goodwill? Old ratio credited, new ratio debited. So if you credit, what will happen? Your equity will increase. If you debit, what will happen? Your equity will decrease. I hope you can remember. What's the adjustment for goodwill? Based on the old ratio, what do? You credit. Based on the new ratio, what do? You debit. What's the old ratio? The old ratio, I'll write it here. If I'm not mistaken, it's 3:2. It's 3:2. Who doesn't get anything? Yamil doesn't get anything in the old ratio. What's the new ratio? I think the new ratio is 5:3:2. The new ratio is 5:3:2. The new ratio is 5:3:2. Right. Now look at this. Look at this. According to new ratio, if you debit, what will happen? Your equity will decrease. According to new ratio, if you debit, what will happen? Your equity will decrease. Right? So look, Yamil invested 600. And according to the old ratio, he does not get anything. So here, the answer is a 0. And then a certain amount of his equity is going to be given for goodwill contribution. After giving that contribution, his capital account has become 500. If so, tell me what was his goodwill contribution? What was his goodwill contribution? Exactly. Very good, man. Very good. His goodwill contribution is 100. Superb. His goodwill contribution is 100. And this 100 is equal to how many share? 2 share. No? This 100 is equal to 2 share. So 1 share is equal to 50. 50 into 3, 150. 50 into 5, 250. There you go. I got my total goodwill. There you go. I got my total goodwill. What's my total goodwill? 250 plus 150 is 400. 400 plus 100 is 500,000. 500,000 is your total goodwill. So according to new ratio, 500 divided by 5. According to old ratio. My bad. According to old ratio, 500 divided by 5, 100. 100 is to 3, 300. 100 is to 2, 200. You see? Are you getting the point? Perfect. Now I found out the goodwill. The goodwill amount is 500,000. So now I can conclude everything. I can conclude everything. 750 plus 300 minus 250. Here the closing balance is going to be 700. 650 plus 200 minus 150. Here the balance is going to be... Oh, wait. I don't want to take a risk. Here the balance is 800. 650 plus 200 minus 150. The balance is 700. I'll do the same thing here. Okay, wait. I can't do that. I can't do it. Why? I need the profits. I need to find these out too. Correct? I should find this out too. Right. To find this out, don't worry. Yamil got our back. To find these two profit element out, Yamil got our back. Yamil, his allocated profit is 120. What's the ratio? 5:3:2, right? So 120 is the allocated profit of Yamil. That is equal to 2 share. So 120 is equal to 2 share. 1 share is equal to 60. 60 into 3. 180 is allocated to Mr. W. 60 into 5. 300 is allocated to Mr. A. Isn't that true? 300 is allocated to Mr. A. Right. So now I can get the closing balance here. What do I get? 600 plus 150 minus 200. I get 550. 100 plus 180 minus 160. I get 120. Now I can get the total equity. 700 plus 120 is 820. 800 plus 550. I don't know if they're asking for this, but I'm completing everything full and full for you to get the complete understanding. Right? There you go. That's the easiest and the most effective way. That's the easiest and the most effective way to do partnership MCQs. Instead of doing debits and credits, putting all the bloody lines. Some people even use rulers. Right? Man, don't waste your time. That's all I can say. Right. Elakiri Puta, what are they looking for? Goodwill. Okay, we found out 500. Profit for the period. They want us to find out the profit for the period. You tell me if I'm correct or wrong, okay? 300 plus 180, 480. 480 plus 120, 600. Is 600 my profit for the period? Is 600 my profit for the period? 300 plus 180, 480. 480 plus 120, 600. Is 600 the profit for the period? No. Perfect. Well done. When they ask you for the profit, what are you supposed to do? When they ask you for the profit, you need to take 3 things into consideration. What are those? Profit, salary, interest on capital. There are 3 things you need to take into consideration. Profit, salary, and interest on capital. And by the way, we got salary, we got profit, but we don't have interest on capital. So 300 plus 180 plus 120 is 600. 600 plus 300, my profit is going to be how much? 900, right? So in the net profit, I'm just saying you got the salary deducted, you got the interest on capital deducted, and you got the profit deducted. Then only the answer will become 0. Right? So the profit deducted was 600. No interest on capital. Salary given to A was 300. So what should have been my net profit? My net profit should have been 900. Right? So there you go. Found out one already. Profit for the period is 900. Goodwill is 500. Your answer is third. Guys, how many of you got that one correct? Can I get a quick response? Those who got 500 and 600? Ade, well done Rashida, well done Lahfan, well done Ruqayya, well done Zaina, and Zainab, well done Izza, well done. Ade, who's this little Nifran? Right, right. Sajna. Okay. It's the fifth one. Wait. Oh, sorry, it's not 500 and 600. When I saw the little Nifran in the chat box, I got confused. It's 500 and 900. It's the fifth one. Well done, well done. Happy for you, man. Very smart, huh? Right. They are also looking for another one. Total equity of the partnership. I think we found out already the total equity of partnership. This plus this plus this. This is the total equity. Right? So 1,350 plus 820 plus 570. The total equity is 2,740. 2,740. So 2,740. Do we have an answer as such? Oh, yes, we do. It's 2,740. Answer third. Guys, just asking. How many of you find this way effective than the T accounts? How many of you find this way more effective than the T accounts? Yeah. Oh, wow. Sri Yadavan. Hajar, the old ratio is given in the question. Right. So guys, I'll tell you what. I'll tell you. In accounting, if you really want to score well, you should learn a lot of techniques, right? And this technique that you learn today, it's actually a golden technique that can be used for you to tackle up any sort of MCQs instead of doing the T accounts, right? Perfect. Now we can move to the next question. Okay, the next question is actually LK 16, property, plant and equipment, initial recognition. All right. Let me munch on something. I'm really hungry. Right. And by the way, I'm eating some unhealthy food today. Fried prawns with mayonnaise. That's good, man. That's so good. No corn soup today. Start an ASMR channel. I got some more things to munch on. Wow, that's a good one too. Anyone gets 100 out of 100 will get this probably after completing the A levels. Everything is getting captured. So what's wrong? I'm just showing what I'm eating. Is there a problem? Not a problem, no. Definitely you'll end up in the washroom. Ade paponda. Let's see. Helpful to create stickers, huh? Valthakal. Thinking of how many stickers I can make. Okay. Ibrahim. I can get a burning smelly bribe. Okay, I can feel many people's stomach is burning. Right, right. Sir, your every actions are becoming stickers. பரவாயில்லடா பரவாயில்ல. Right, 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 right. Okay. Yeah, I can see all of you are burning. Burn, 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 burn and die. Burn and die. Right? Show your plate and we'll make another sticker. Okay. Thanks for being there. Thanks for roasting. Next question. What are they asking for? They're asking for the cost of the machine. I hope you can remember. In PP recognition, you take three things. What do you take? The purchase price. You take all the expenses incurred to bring the asset to the present location. And we should also take all the expenses incurred to bring the asset to the present condition. And if there is any future dismantling cost, we need to take them too, right? So these are the things that you need to take into consideration. Okay. This business is not registered for VAT. This business is not registered for VAT. Okay. Price paid is 345. Shall I ask you a question? If this business is not registered for VAT, if this business is not registered for VAT, tell me guys, do you take the VAT or do you exclude the VAT? If this business is not registered for VAT, do you take the VAT or exclude the VAT? Exclude it or take it? Yes. If the business is not registered, registered for VAT, then you should keep the VAT in it. You should keep the VAT in the calculation. Why should you keep the VAT in the calculation? Because you are not in a position to claim the VAT. If you are able to claim the VAT, fine. If you are unable to claim the VAT, then sorry, right? So you have to keep the VAT in it. You have to keep the VAT in it, right? So there is a twist in this question. In this 345, answer me. In this 345, do we have the VAT or not? In the price paid, do we have the VAT or not? Listen, we got the price, right? To the price, VAT is imposed. Not the price, sorry. We got the list value of the machine. The list value of the machine, to that VAT will be imposed. Okay. So we will be paying the list value as well as the VAT value together. So this price paid, listen to me, this price paid is in fact the cash paid. This price paid is in fact the cash paid. So this 345 already includes what? 45. This 345 already includes 45. So what's the list value of the machine? The list value of the machine is 300. And what did we say? We all said, sir, keep 300 and keep the VAT as well. You all agreed to keep the 300. Of course, that should be kept because that's obviously the purchase price, right? So you all told me to take that 300 and you should also warn me to take that 45, right? So in this 345, VAT is already included. So you don't need to take that 45,000 again. You don't need to take this 45,000 again because this 45,000 is already included in this 345. That's the only trap that the examiner has kept you here. And I believe anyone with the basic amount of knowledge will be able to figure this out. Anyone with the basic amount of knowledge will be able to figure this out. So you need to understand this 45 is already included in 345 because this 345 is the cash paid. Okay. So this 345 includes the VAT paid and it includes the purchase price being paid. And given that the business is not registered for VAT, we should not exclude the VAT. We should keep it. So I'm going to keep this 300. I'm going to keep this 45. So I'm going to keep this entire 345. I'm going to keep this entire 345. Brilliant. I don't need to take this 45,000 because it is already included. Transport cost to bring the machine to the business, I should take it present location. Installation and site preparation cost, I should take it present condition. Employee training cost, machine maintenance cost. What do you think? Do we take employee training and machine maintenance? No, exactly. Yes. We don't take it, don't we? Right? So do not take employee training cost. Do not take machine maintenance. If so, what's the answer you get? 345 plus 30 plus 25. You get 400,000. Your answer is first. You get 400,000. Your answer is first. Very good, guys. Very good. I really appreciate that. Yeah. Very well done. Okay, someone is saying, sir, look like I don't have the basic knowledge. If you don't have the basic knowledge, then you should learn it, Puta. Okay. Okay. That's the answer for question number 6. How many of you got the 6 correct? Can I get a quick response? Ade, well done, Puta. Well done, huh? Niyamai. So why don't we add the maintenance cost? Hafsa, okay. You do not add the maintenance cost, Tangachi, because machine maintenance cost is not related to purchase. It is a recurring expense. Maintenance is done every year. We need to find out the cost of the purchase, right? Cost of the purchase include the purchase price, cost incurred in bringing the asset to the present location, cost incurred in bringing the asset to the present condition, and any future dismantling cost. These are the 4 things that you need to take into consideration. Machine maintenance and employee training cost are not fitting into any of these factors. They are not fitting into any of these criteria. Machine maintenance is in fact Hafsa. It's a regular cost. It is going to happen every year. So you cannot consider that as a cost that is related to the purchase. I believe that's clear to you. So what's the last point you wrote in the side? Let me show you. Yeah. It's future dismantling cost. Future dismantling cost. This is really tested in the exam. Future dismantling cost is really tested. I don't think they would even test you on this. Okay. Righto. Superb. Niyamai. Now let's move to the, okay, if the company is VAT registered, you need to remove the VAT out. Okay, if the company is VAT registered, you don't take 345. Instead, you will take how much? You'll take 300. If the company is registered for VAT. Given that the company is not registered, you take the entire 345. I believe NK, you are okay with it. Right. Next question is a beautiful question. Trust me. So the PLC revalued its property, plant and equipment for second time on 2021 3/31st as given below. There is a land revaluation surplus of 400. There's a building revaluation deficit of 150. And then they tell you a long story, right? A deficit of 150 occurred in revaluation of land for the first time, and a surplus of 100,000 occurred in revaluing the building for the first time, were recorded in the accounting books. Which of the following statement are correct? They've given us 4 information. Let's work it out. Right. Guys, look. Both these assets are revalued the second time. Both these assets are revalued the second time, right? When we revalued land for the first time, there was a deficit of 150. This 150 would have been recorded as an expense. This 150 would have been recorded as an expense this time or last time? Last time. And I think the second one was building. Right. When building was revalued, there was a surplus of 100. There was a surplus of 100. And this surplus, we all can conclude, would have gone to the revaluation reserve. This 100 would have gone to the revaluation reserve, correct? Right. So now second time what happens? We are revaluing it. Second time what do? We revalue it. Right. When we revalue the land with a surplus of 400. We revalue the building with a deficit of 150. Okay. Land is again revalued for the second time. Land is again revalued for the second time with a surplus of 400. Building also revalued for the second time with a deficit of 150. Okay. Let's go step by step. Let's go step by step. Finish it for me. Out of 400, what can I do? This 150 can be set off. Am I correct? Out of 400, this 150 can be set off. Okay. So I'm going to set off that 150. If I set off that 150, what will happen to my expense? My expense will go down. What will happen to my expense? My expense will go down. So, I'm just saying, you got the gross profit, right? With the gross profit, you add the income, but we don't have any income. Let me minus the expenses, right? When you minus the expenses, tell me, okay, here, right now, be very careful, okay? I'm going to reduce the expense. What am I going to do? I'm going to, normally expenses are added, right? Normally expenses are added, okay? So let me have those two columns. If not, you'll get confused. Normally, what do? I keep on adding the expenses, right? Now, am I going to add the expense or deduct the expense? I'm going to deduct the expense by 150. What would I say? Revaluation surplus. Why did I do that? Because last time when the land was revalued, I increased the expense by 150. Last time when the land was revalued, I increased the expense by 150 according to the prudence concept. This time when the land was revalued the second time, this year when the land was revalued for the second time, I got 400 surplus. Out of 400, 150 can be set off against that expense, right? So last time we increased the expense. This time what can we do? We can decrease it. Whatever that we showed as expense, I can set it off now. So last year we would have increased the expense by 150. Now what I'm doing? I'm decreasing it by 150. That's point number one. Answer me. After setting this 150 off, how much is left? After setting 150 off, another 250 is left, right? Tell me where this 250 go to. Where this 250 go to? Where this 250 go to? Yes. Out of 400 surplus, 150 can be set off against the expense. Where the balance 250 goes to? No, it doesn't go to OCI. I never told you it goes to OCI. When did I say it goes to OCI? It goes to revaluation reserve. Where does it go to? It goes to the revaluation reserve. It doesn't go to OCI. OCI is a disclosure. OCI is a disclosure, right? It goes to revaluation reserve. When revaluation reserve increase, OCI increase. Okay. Don't say it goes to OCI first. It goes to revaluation reserve. When revaluation reserve increase only, we increase the OCI, right? Okay. So this 250, where does it go? It goes to the revaluation reserve. So listen to me. Already in the revaluation reserve, there is an opening balance of how much? 100 day. That 100, whose balance is it? Buildings surplus. Right? Now how much is coming? 250 coming in. This 250, what surplus is it? Land surplus. Right? So now the technique is working out. If the revaluation reserve increase, what happens to my OCI? My OCI increase it too. I hope you can remember. Okay. If the revaluation reserve increase, my OCI increase too. So my OCI is increasing now. Revaluation gain on land. How much is it? 250. My OCI gone up. Perfect. So what's the total surplus? 400. Out of 400, 150 set off against the expense. The remaining 250 goes to the revaluation reserve. If revaluation reserve increase, OCI increase. If revaluation reserve decrease, OCI decrease. This was a shortcut that I taught you back in companies. This was a shortcut that I taught you back in companies. If revaluation reserve increase, have no doubts, OCI increase too. If revaluation reserve decrease, again have no doubts, decrease the OCI. I hope that's clear. Right. Now to the building. Now to the building. Building we have 150, right? What can we do? Out of this 150 loss, 100 could be claimed. What can we do? 100 could be claimed from the revaluation reserve, right? We already have 100 sitting in the revaluation reserve as the surplus of revaluation of building, right? So previous year there was a surplus of 100 sitting in the revaluation reserve. This year we are getting a loss. Out of that 150 loss, 100 could be set off against the revaluation reserve, right? So what I'm going to do, I'm going to set that 100 off. I would say building revaluation loss claimed. Building revaluation loss claimed. Okay. After claiming, out of 150, 100 is claimed. After claiming 100, how much is left? 50 is left. Answer me. This 50, where should it go? Very good, Zainab. What about others? Where should this 50 go to? Exactly. That 50 should go to expenses. We can't help it. Right? This 50 should go to expenses. Now what's happening? I'm getting a revaluation loss. So will my expense increase or decrease? My expense will increase. My expense will increase by how much? 50. And now back to the revaluation reserve. Shortcut. What was the shortcut I taught you? If revaluation reserve goes down, OCI goes down. If revaluation reserve goes up, OCI goes up. In my case, the revaluation reserve is coming down, right? You can see the revaluation reserve is coming down. So if the revaluation reserve comes down, I'm going to write down here, revaluation loss on building. How much? 100. Brilliant. Right. So what was the total loss? The total loss was 150. Out of 150, 100 was claimed from the revaluation reserve. The remaining 50, we can't help it. We take it to the expenses. I know the common mistake most of the students make. The common mistake most of the students make, they think there is 350 now. They think there is 350. They try to set off the entire 150 from this 350. You can't do that. Always keep in mind the loss of building, the revaluation loss of building should be set off against the revaluation surplus of building. You cannot set off the revaluation loss of building against the surplus of land. Always set off building with building. Always claim the building with building. You cannot claim the land surplus against the building loss. Okay, it's always a building against a building, if not a land against a land, if not a motor vehicle against a motor vehicle. Guess what most of the students do? I mean, without proper understanding, they try to set off the building loss against the land revaluation surplus. You can't do that. You can't do that. Always set off should be done against similar assets. Land revaluation surplus can be set off against land revaluation loss. You cannot set off a land revaluation surplus against a building revaluation loss. It's mismatching. Try to match it, right? Brilliant. That's actually the entire set of annotation we should do in order to find the answer out. Okay. What's the first statement that they are telling about? The first statement, they say, profit for the period will increase by 50. What do you think? Will the profit increase by 50? Here you get the profit, by the way. Here you get the profit. Your expense is decreasing by 150 and your expense is increasing by 50. What's the net impact? Your expense is decreasing by 150. Listen, if your expense goes down by 150, your profit will increase. If your expense go up by 50, your profit will decrease. Am I correct? Right? So your profit is increasing by 150, decreasing by 50. Your profit is increasing by 150, decreasing by 50. So indeed, my profit is increasing by 100,000. Increase by 100,000. So do we have an answer? Yes. Yeah. Profit for the period will increase by 50. Is it correct or wrong? Sorry, this answer is wrong. This answer is wrong. Other comprehensive income will increase by 150,000. What do you think? Yeah, right. Increase by 250, decrease by 100. So the net impact is increase by 150. So I think statement B is correct. I think statement B is correct. Niyamai. Statement C, other expense will decrease by 100,000. Other expense will decrease by 100,000. What do you think? Other expense decreases by 100. Correct or wrong? Other expense will decrease by 100,000. What do you think? Is it correct or wrong? It's correct, no? It's correct. Why? Expense, look, expense is decreasing by 150, again increasing by 50. What's the net impact? The net impact is expense decreasing by 100, and that's true. That's true, right? Brilliant, brilliant, brilliant. So even statement C is true. Statement D, total comprehensive income will increase by 250. Total comprehensive income will increase by 250. What do you think? TCI, total comprehensive income. Man, here you can go wrong. Here you can go wrong. Pay attention to this. Listen. If your profit increases by 100, if your profit increases by 100, okay, I'll write it the other way around. Okay, here I'll say profit. Here I'll say TCI. Okay, right. If your profit increases by 100, keep in mind your TCI will also increase by 100. Do you know why? Because there is a positive relationship between what? TCI and profit. And it's quite obvious, right? If this increase, the final answer also should increase, no? This is TCI, no? Right? If this increase, the final answer should also increase. Okay? So the profit increased by 100. Okay? So if the profit increases by 100, my total comprehensive income will also increase by 100. And then the relationship between what? The relationship between OCI and TCI. The relationship between OCI and TCI, just to let you know, it's also positive. If OCI increase, TCI will increase. If OCI decrease, TCI will decrease. Now, what's happening to OCI? OCI is also increasing by how much? 150, right? So if OCI increases by 150, again, my TCI will increase by 150. So what's the total increase that's happening in the TCI? TCI will increase by 250, right? So is statement D correct or wrong? Yes, statement D is also correct. So what's your answer? Your answer is B, C, D only. What's your answer? Your answer is B, C, D only. Guys, how many of you got this correct? How many of you got this one correct? Well done, Rashida. Well done, Zaina. Well done, Fatima. Yes, Sajna. Very good. Okay, amazing. I think many of you got that correct. Okay. To the next question. KEMA PLC purchased a machine for 12,500 on 2017-41. Its estimated useful life and residual value are 9 years and 1.7 million. Its useful lifetime and residual value are re-estimated on 2024-1 in accordance with the new estimation. Useful lifetime residual value were 5 years and 900,000. The carrying value of the property, plant and equipment on 2021 3/31st. Okay, let's work this out. This is a bit of an easy question. I must say this is a bit of an easy one because there was a similar question that I saw in past paper. Same pattern, but the figures are different. Same pattern, but the figures are different. Okay. You know what you should do, right? You know what you should do. If such question is given, you take the cost minus the accumulated depreciation. What do you get? You get the carrying value, right? Okay. Cost figure is 12,500. Right. When did you buy it? You bought it on 1/4/2017. When are you doing the remeasurement of useful lifetime and residual value? You do the remeasurement on 1/4/2020. You do the remeasurement on 1/4/2020. So how long have you been using this asset? You are using this asset for 18, 19, 20. You use it for 3 years, right? So you need to collect depreciation for how many years time? 3 years time. Accumulated depreciation. For how many years are you supposed to collect it? 3 years, right? How do you calculate depreciation? Quite simple. 12,500 is the cost minus the residual value. The residual value is 1,700 divided by the useful lifetime. The useful lifetime given is 9 years. And whatever the answer you get, you should prorate it for how many years time? 3 years time. Okay. So 12,500 is the cost minus the residual value 1,700 divided by 9 years. 1 year depreciation is 1,200 multiplied by 3, you get 3,600. So by the time the cost and residual value is reevaluated, the asset is depreciated by 3,600. So what's the actual value of the asset by the time you do the revision? By the time you do the revision, the value become 8,900. By the time you do the revision is done on 1/4/2022. By the time you do the revision, the value has become 8,900. So you bought it for 12,500 on 1/4/70. You depreciated it for 3 years. That's 3,600. By the time you do the revision, the value of the asset is 8,900. Now, what are they asking for? They are asking for the carrying value of the asset on 31st March 2021. They are looking for this. What are they looking for? They are looking for this, right? Again, this year, what should I do? I should depreciate it. This year, what am I going to do? I'm going to depreciate it. Who can tell me? When I depreciate the asset this year after the revision, when I depreciate the asset, okay, answer me. Am I going to consider my cost 12,500 or should I consider my cost to be 8,900? While I'm calculating depreciation after revision, is my cost is 12,500 or is it going to be 8,900? Exactly, man. Exactly. It's going to be 8,900. Really happy for you, man. Superb. It's 8,900. So it's the revised cost minus the revised residual value divided by the revised useful lifetime. Agree? Right. So what's the revised cost? The revised cost is 8,900. What's the revised residual value? I think the revised residual value and the useful lifetime is given. I'll quickly show it to you. Okay. The revised residual value is 900,000 and the useful lifetime is 5 years. So 900,000 is the revised residual value. The revised useful lifetime is 5 years time. Right? So 8,000 divided by 5, you get how much? 1,600. So if 1,600 is accumulated depreciation for that particular year, your carrying value is going to be how much? 7,300. Okay, so 7,300 is the answer. Very good, Ayash. Well done. Right. Your answer is 7,300. Yes, we do have an answer. Fourth. What? Yeah, those who got that one correct. Ade Niyamaya. I think you guys are doing better. You guys are honestly doing better. Right. The next question that we got on the line is a good one because it is related to cash flow. Okay. Class overing time. I don't know the class overing time. Buddha. I'll complete the 20 question and I'll go home. Right. Whomsoever can stay, you can stay. Whomsoever want to leave, you can leave. Okay. You need a break. If you need a break, in the 10th question, I'll give you like a 10 minutes break. If you really need it. Okay. Do the 9th and 10th. Just do the 9th and 10th. Right. The following transactions and events took place in a company during the year 2021 3/31st. They've given us 4 transactions. They're asking for net cash flow from operating activities and net cash flow from investment activities. And they're also asking for the equity. They're also asking for what? Equity. Okay. Let's do this. Let's do this. They're asking for the net cash flow from operational activity. Net cash flow from investing activity. And they are also asking for the impact on equity. Okay. Question number 1. The company made a lease agreement on 2024-1 to use a building for 4 years. The present value of the lease liability is 8,600. 400 was spent by the company to renovate the building. It is expected that the renovation expense would benefit the company during the lease period. Right. So what's happening? You're obtaining an asset on lease. You are obtaining an asset on lease. 8,600 is the lease liability. 8,600 is the lease liability. Okay. Right. And on top of this 8,600, you're also spending another 400 on your own for renovation. So now the actual fair value of the asset is 9,000. The actual fair value of the asset is 9,000. Agree? Let me repeat it. 8,600 machan. 8,600 is the lease liability, the amount that you're supposed to pay to the leasing company. Okay. 400 you spent out of your pocket. You spent it out of your pocket. So the total fair value of the asset that you obtained is basically 9,000. So the cost of the building is going to be 9,000. Out of 9,000, 400 is spent by you. 8,600 is actually given to you by the leasing company. Shall I ask you a question? This 400, is it finance activity or investing activity? The amount that you paid from your end, that 400, is it finance or investing activity? What's your answer? Right. Why it's investing? Answer me why it's investing. Right. Because this is a building, right? What are you acquiring? You are acquiring a building. You're purchasing a building. And this 400 you are paying from your pocket. You are paying from your pocket. If you pay from your pocket for a PPE, it is not you financing that 400,000 from someone else. If you take that 400,000, from someone else, okay, that's financing because you need money. You took that 400,000 from another person. But here you are not taking 400,000 from someone. What do? You put this 400,000 into a building from your pocket. So that's an investing activity. That's an investing activity. What happens to the cash? Cash goes out. What happens to cash? Cash goes out. Right. Now, what about this 8,600? Is it investing activity or finance activity? Just asking. Is it investing or finance? What's your answer? Right. It's finance, no? It's finance. Shall I ask you a question? If they haven't asked it, but if they ask net cash flow from finance activity, can I put this 8,600 as a cash inflow? If they ask me net cash flow from finance activities, can I put that 8,600 as a cash inflow under finance activity? You all said it's finance. Now you are telling no. Why no? Why no, Buddha? It's a non-cash flow. Exactly. You didn't get the cash, no, Buddha. Are you bloody getting the cash or getting a building? You are getting a building, man. If you obtain a bank loan, you get the cash. If you obtain a bank loan, you are getting the cash coming in. Okay. But if you obtain a motor vehicle on lease, yeah, it's financing activity. It is financing activity. You're financing a motor vehicle. So cash doesn't come in. In cash flow statement, what are we looking for? We are looking for the cash flows. What are we looking for? We are actually looking for the cash flows. You heard me, right? So indeed, imagine I'm getting a car in finance, right? If I get a car through finance lease, of course I'm financing my business, but I'm not financing my business cash. What am I financing? I'm financing my business a car. I'm financing my business a motor vehicle. So what comes in? Car comes in. So this 8,600 cannot be shown as a net cash flow from finance activity because it is a what? Non-cash flow. Just trying to make you understand. In case if you get a question somewhere else, I don't want you to get caught there. Right? So this 400 machan, it goes for investing activity. This 8,600 is a non-cash flow. Near mind. Move to the repayment of lease. Very good. Repayment of lease is finance. I get the motor vehicle came in, so that's finance activity, non-cash flow. When I repay the lease, cash goes out, that's finance activity, cash outflow. Okay, wait. Danish. Wait. Danish is asking some good questions, right? I'll explain that now. I'll explain that now. Okay, because it's a wonderful question she asked me, and I would like to explain this to everyone. Listen. Imagine the fair value of a car is 9,000. Imagine the fair value of the car is 9,000. Okay? Right. Imagine you make a down payment of 2,000. If you make a down payment of 2,000, how much is left to be paid? 7,000 is left to be paid. That's the lease liability. Out of 7,000, let's say you pay your first installment. You pay your first installment, let's say that's 3,000. If you pay 3,000, you are left with another 4,000. Okay, that's the closing balance. What is this? What is this? What is this? What is this? And I don't need this. A, B, C, D. Name it. Name it. Even if I don't get to do 2 MCQs today, no problem. Learn this part. Name them. What is A? What is B? What is B? What is C? And what is D? Please. I'm looking for some answers. I'm waiting for you. Let's say this doesn't have interest. No interest. No interest. No, I'm asking Ibrahim. A, B, C, D is there, no? You can conclude them as non-cash flow, investing activity, finance activity, operational activity. Is it investing, finance, operational or non-cash flow? எங்க சத்தம் இல்ல. Right, I think right, I think I'm getting some I'm getting some good answers, okay? Now, some of you are saying A is non-cash flow because it is an asset that we are getting. Down payment, some of you are saying investing, some of you are saying finance. Some of you are arguing this to be investing, some of you are arguing this to be finance. Lease liability, you are saying non-cash flow, yeah, these two are non-cash flow. And these 3,000, obviously, you categorized it as finance, right? Yeah, correct, correct, correct. You're going to have two answers here. Is it either investing or finance? That's my question. Is it investing or finance? Imagine this comes in your exam and you get confused there. Investing according to past paper. Danish, at the beginning, did you say down payment of lease is finance according to past paper? Now you are saying, is it, did you get confused or what? At the beginning, you told down payment of lease is finance according to past paper. Yeah, you don't necessarily need to have confusions there. Okay, you don't have you don't need to have any confusions there. Okay, listen. This is clearly investing. This is clearly investing. Why it is clearly investing? Okay, this is clearly investing because you're paying for the asset. How come that becomes finance? What is happening? You're paying for the asset. So if you pay for the asset, it's what? It's actually you are acquiring the PPE, right? So if you acquire the PPE, what does it become? It becomes an investing activity. Isn't that true? Right? So that's a clear shot that you need to keep in the back of your head. Fair value of the asset is non-cash flow. That's an asset. Down payment you make is investing activity. Lease liability 7,000 is non-cash flow. Installment that you pay is finance activity. Okay, that's something that you must keep it in the back of your head, please. Okay, right. Exactly. Just wanted to know what your thoughts on that. Okay, because some of you were like a little, little confused. Okay, that's why I wanted to take some time and explain that to you. Perfect. Now, listen. Annual lease installment for the year ending is 3615 was paid. This installment includes a lease interest of 1,220. Right. Now, annual lease installment paid, we just looked at it. It's finance, but they are not asking for finance. And there is a lease interest of how much? 1,220. Lease interest, what is it? You can say it's operational activity. Isn't that true? Lease interest is operational activity. Good. Superb. Right. So there is a lease interest, how much? 1,220. When you pay, cash goes out. Interest. Okay, this is renovation paid. This is the renovation that you paid. Right. Now, they're asking for the effect in equity, and there is interest. Interest is an expense, and your equity is going to go down. Interest is an expense, and your equity is going to go down. They're obviously asking for the equity too, right? What's the next one? Rent income received during the year is 1,530. Answer me. Rent income received, operational or investing? Rent income received, operational or investing? Rent income received, Rent income received, operational or investing? Okay. Rent income received. What's your answer? Many of you are saying operational. Is there anyone saying investing? Right. Is it investing or operational? Yes. If you rented out a building, out, right? You have literally rented it out with the intention of making profit, right? You've rented it out with the intention of making profit. If you've rented it out with the intention of making profit, it is investing. Why did you invest on the PPE? You invested on the PPE. You bought the building. Why did you buy the building? You bought the building so that you can get rent income. It's more like investing on shares. If you bought shares, what do you get? Dividend. If you bought a building, what do you get? Rent. So if dividend received is investing activity. If dividend received is investing activity, rent income received should also be investing. Isn't that true? Because buying shares, buying a building, both are done with the intention of making more money, right? So when you receive rent income, it is not operational, it's investing activity. 1530. 1530. What is it? Rent income received. Perfect. Perfect. Right? That's net cash flow from investing activity. Then the next one, land was revalued at a surplus. Again, land was revalued at a surplus is a non-cash flow. That has got nothing to do with the cash flow statement. And by the way, rent income increases my equity because it's an income. And when land is revalued, you must know, when land is revalued with a surplus, my revaluation reserve increases. If my revaluation reserve increase, my equity increase too. So my equity is increasing again by 1,500. What is it? Revaluation reserve, because I'm getting a surplus. Are we clear? Right. So now I know the net cash flow from operational activity, net cash flow from investing activity. Let me sort that out first. Here I get minus 1,220. Cash goes out. Here what do I get? 1530 minus 400, 1130. So here the cash increases. Here the cash decreases. Do I have an answer as such? 1,220 decrease, 1,130 increase. Your answer is second. Your answer is second. Right. It's second, right? Yeah. 1,220 decrease, 1,130 increase. Right. And they're also asking for the net impact on equity, right? Guys, here don't forget. Don't forget. Here there is interest. Interest decreases my equity. And here there is an income. Income increases my equity. And here there is a revaluation gain. It increases my equity. So there is an interest expense decreases my equity. Rent income increases my equity. Revaluation surplus increase my equity. Okay, now wait. There is one thing the examiner didn't talk about, but that has an impact on equity. What is it? There is one indirect thing. The examiner didn't directly tell it to you. He has actually told it to you in an indirect way. Which figure is he talking about? Which one? Exactly, Faz. He's talking about the depreciation. Here, they bought it, right? They bought it for how much? 8,600 is the lease. 400 was spent. So the building was bought on lease with a partial payment being made for the renovation. When did you buy it? On 2024. They asked him for the equity on 2021 3/31st. So look, this building needs to be depreciated. 9,000 is the fair value. I think there is no residual value, but the useful lifetime is how many years time? The useful lifetime is 4 years. The useful lifetime is 4 years. So what's the depreciation I'm going to get? 9,000 divided by 4. I get 2,250. What do I get? I get 2,250. Is there a plus or minus? That's a minus. 2,250. I can say right of asset depreciation. So now I can get the net impact on equity. What's the net impact on equity? Minus 1,220, 1530, 1,500, minus 2,250. My answer is 440 decrease. What's my answer? My answer is 440 decrease. Let me try to find that answer out. Right, there you go. I have an answer, decrease 440. I got an answer. How much is it? Decrease 440. Guys, Be honest, how many of you got the 9th one and 10th one correct? Those who got the 9th one and 10th one correct? Rent expense is operational, Arham. Rent expense is operational, but here it's rent income. Well done, Kritika. What about others? How many of you got the correct? Okay, Rukaya got it wrong. Faz correct, guys. Well done, Aisha. Right. Forget about getting it correct. Did you learn all the important concepts out of that MCQ? That's what I want. Did you learn all the important concepts from that MCQ? Yeah. Can I get a, yes on that? Right. So guys, it does not necessarily need to be the correct answer. Even if you got that wrong, no problem, as long as you understood the points. Look, through that MCQ, we learned a lot. Through that MCQ, we learned a lot. The fair value of the asset is non-cash flow. The down payment is investing activity. The lease liability that is to be paid is non-cash flow. Out of the lease liability, the installment you pay is finance. The interest you pay is operational. Let me repeat it. The fair value is an asset, non-cash flow. Down payment you pay for it. It's you paying for the asset. It's investing. It's you paying for the asset. It's investing. And the lease liability, 7,000 is a non-cash flow because there's no cash inflow. There's no cash outflow. Then out of 7,000, if you pay 3,000 installment, that becomes a finance activity. I hope that's clear. Right. Near my guys. It's 11:05. Yeah, that's fine. That's fine, guys. You don't. That's what I said. I was late to drop the paper in the group as well. So yeah, I have made a mistake too. Guys, what about the next few questions? Are we going to do that and call it a day as quick as possible, or do you need a break? Dinner break. Yeah. Can I get a quick voting on the break? It's 50-50. Yeah. Some are fighting for the break. Some don't want a break. Guys, I told you. What did I say? I told you it's 9 p.m. onwards. Okay. I have the target. I'll complete and go. Whomsoever want to go and sleep, you can go and sleep. No problem, Machan. No issues. JD, you can go if you want. No issues at all. Yeah. I'm telling you, Liz, I told you it's 9 p.m. onwards. Okay. When I say 9 p.m. onwards, I will go until I finish the class. Even if one student is there, I'm going to teach. Okay, I think the majority is looking for a break. 42 people are looking for a break. 35 says, let's go. Okay, let's do this. Let's take a small break, like 15 minutes, and let's be back. Okay, let's meet at, let's meet at 11:30. Okay, let's meet at 11:30. Let's try to finish this off. Okay. I'll meet you back at 7:30, not 7:30, 11:30. Be there, yeah. Okay, back to the game. Sorry. Right. So guys, we have actually discussed 10 questions, and to be honest with you, all those 10 questions are really complicating questions, and we learned a lot. Until now, we've learned a lot, right? For example, what we learned in the lease was absolutely some good set of information, right? And this can obviously help you to tackle up many lease questions coming ahead, right? Okay, we are now moving to question number 11, right? Land was acquired by a company on 1/10/18 to construct a company's warehouse. In respect for following expenses were incurred, right? So they've incurred 5,000 for the land, stamp duty and legal fee 250, cost of preparation of the land for construction 500, construction for the building is 2,000, fixing a special security system for the building is 300, annual maintenance cost of the building is 200, right? So they want us to find out the value of the property and the depreciation charge. So purchase price of the land, you must take it. Stamp duty and legal fees, you should take it. Cost of preparation of the land for construction, you should take it. Cost of construction of the building, you should take it. Fixing a special security system for the building, you should take it. Annual maintenance, you don't take it because it is not a purchase related expense. It's a recurring expense that's going to come every year. It's a recurring expense that's going to come every year. So except this 200, you have to take the rest of the things. Except this 200, you have to take the rest of the things, right? So if you have to take the rest of the things except that 200, what do you get? I guess you get 8,050. I guess you get 8,050, right? Right, exactly. You get 8,050. 8,050 is the property value. Okay, I think we got many 8,050s. We got many 8,050s. Now, what are they looking for? They are looking for the depreciation, right? What are they looking for? They are looking for the depreciation. You need to understand this 8,050 consists of two properties. It got the land, it got the building. Land is not depreciated. So you should not calculate depreciation for land. You should only calculate depreciation for the building, right? Okay. Now, if you are to go and try to differentiate between the cost of the land and building, purchase price of the land is actually a cost related to land. Stamp duty and legal fee is a cost related to land. Cost of preparation of the land for construction is a cost related to land, right? At this point, everything is related to land. Until this point, everything is related to land. Cost of construction of the building, obviously it is related to the building. Fixing a special security system for the building is also a cost related to building. So these two are actually the cost of the building, right? So out of this 2,000, out of this 8,050, 2,300 is building. 2,300 is my building. 5,750 is my land, and I don't depreciate land. What do I depreciate? I only depreciate the building, right? So 2,300 is the cost of the building. Residual value is 300 divided by the useful lifetime. The useful lifetime is 40 years. If I do so, I will get 2,000 divided by 40, 50,000. 50,000 is the depreciation I get for a year. But I cannot depreciate it for 1 year. I can't depreciate this asset for 1 year. Do you know why can't I depreciate this asset for 1 year? Because you can clearly see the construction work. The construction work was completed on 1/1/2020. And they are asking for the depreciation on 31st March 2020. Tell me, for how long did we use the building? For how long did we use the building? Right. We used it for 3 months. So this 50,000 is for how many months? 12 months. We need it for 3 months. So we will get 12,500. What will we get? 12,500. So the value of the property is 8,050. And the depreciation of the asset is 12,500. 100, right? So 8,050, 12,500. Do we have an answer as such? I guess we do. 8,050, 12,500. The answer is second. What's your answer? Your answer is second. Okay, how many of you got the 11th one correct? EMI. Well done, Lafan. Well done. Well done, Izza. Well done, Zaina, Rashida, Ruqayya. Very good. Very good. Okay. Many of you seems to have got that question correct. The only twist you have in this question is the cost of the land and building. Some of you would take the entire 8,050 and would have tried to calculate depreciation for that 8,050. If you've done that, you are wrong, because this 8,050 consists of land as well, which you should exclude from the calculation of depreciation. Good. Now to the next question. Right. The following transactions occurred during the month of March 2020 in a firm. What was the total expense to be matched with the revenue? Right. So you need to pick the total expense to be matched with the revenue. So simply you need to take the expense that is going to be shown in the income statement. You're going to find out the expense that is going to be shown in the income statement. Okay. 50,000 worth of an office equipment was purchased, right? You paid 50,000 to purchase an office equipment. Do you show that as an expense or do you show that as an asset? Is there an expense or asset? Purchasing 50,000 worth of an office equipment. It's an asset, right? Very good. It's an asset, right? So it is not an expense. What is it? It's an asset, so it cannot be matched. So 50,000 cannot be taken to the income statement, right? Made credit purchase of inventory 20,000, out of which goods costing 10,000 were sold during the month of March, right? So we bought 20,000 worth of goods. That's the purchase. Out of that, 10,000 worth of inventories are remaining. If 10,000 worth of inventories are remaining, how much worth of inventories are sold? Another 10,000 worth of inventories are sold. 20,000 worth of inventories are purchased, out of which 10,000 worth of inventories are remaining. Okay. So the remaining 10,000 were sold. This 10,000, what is it? Cost of sales. This 10,000, what is it? Cost of sales. And it is an expense. Where do you take it to? You take it to the income statement. So the second one, you take that. Second one, you take that. So let me put that in, mark that in green color. 20,000, you have to take it. Right. Electricity bill payable for the month of March was 5,000. You know, whether an expense is paid or payable, it has to be taken to the income statement. Whether an expense is paid or not paid, you don't care. Expense is an expense. It has to be taken to the income statement. Right. Owner's personal life insurance premium paid by the business was 2,000. This 2,000, you don't take it because it is a drawing. This 2,000, you don't take it. Why? Because it is a drawing. Drawing is not taken to the income statement. Right. Paid 3 months of rent, 36,000 at once, which begins from the month of March. Okay. You are actually preparing everything for March, right? Month of March. You are preparing everything for the month of March. Okay. In March, you are paying 36,000. But the 36,000 is not just paid for March. The 36,000 is paid for March, April, and May for 3 months. Paid 3 months, 36,000. So this 36,000 is paid for 3 months, for March 12, for April 12, for May 12. Tell me, out of 36, this 2 12s, in other words, this 24, it is a prepaid expense. Prepaid expense, you know, is an asset. Prepaid expense, what is it? It's an asset. So my expense is 12,000. My expense is how much? 12,000. 12,000 is going to be my expense. So out of this 36,000, how much is my expense? 12,000 is going to be my expense. 12,000 is going to be my expense. So how much am I going to match? How much am I going to match? Look, 20,000, 5,000, 25,000, 25,000 plus 12,000, 25 plus 12. What do you get? You get 37. Oh no, 25 plus 12, no? Yeah, 25. Oh, not 20, no. I'm sorry. I marked it correctly, but when I was annotating, I annotated the wrong one. 10,000 is the cost of sales, right? Sorry, that's what I explained it to you as well, right? Explained it to you correctly, but when I marked it wrong. This 50,000, you can't take it. Out of this 20,000, 10,000 is the cost of sales, you can take it. Electricity bill payable for the month of March, 5,000, you can take it. Out of 36,000, 12,000 is the expense, you can take it. The remaining 24,000 are prepaid. So 10 plus 5, 15, 15 plus 12, it's 27,000. What's your answer? Your answer is first one. What's your answer? Your answer is the first one. Right. Guys, how many of you got that one correct? 27. Niyamai. Well done. Right. Okay. Next question. A club was formed on 1/4/2019 with 50 members, of whom 10 are life members. Monthly subscription per member is 500. In order to become a lifetime member, 15 years of subscription should be paid at once. The lifetime membership fee is recognized in income equally over a period of 15 years from the year of admission. Of the other 40 members, 10 members paid subscription for 10 months, 25 members paid for 12 months, rest paid for 18 months. Find the following for the year ended 31st March 2020. Now, this is NPO. And we are going to deal with subscription. If you are dealing with subscription, the easiest thing we can do to find out the answer is to draw a subscription account. Right? In the subscription, we got brought forward on debit side, brought forward in the credit side as well. Brought forward on debit side is opening receivable. Brought forward on the credit side is opening advance. Income on the debit side, cash on the credit side. Carried down in both the sides. Brought down and brought down in both the sides as well. Now, we started the company this year. Therefore, there cannot be any opening balances. We started the company this year, therefore, there cannot be any opening balances. Right. How many members are there? There is a total of 50 members, by the way. Out of 50 members, 10 members are life members. Out of 50 members, 10 members are life members. Okay. So out of 50 members, if 10 members are life members, 40 members are normal members. 40 members are normal members. So to find out the income, I got 40 members. How many members are there? 40 members are there. How much are they supposed to pay? How much are they supposed to pay? 40 members. Okay. The monthly subscription per member is 500. Right? But we are calculating it for a year. So monthly subscription is 500. We need it for how many months? 12 months, because we are doing it for a year. Right? So this can get me the income. 500 into 12 multiplied by 40. My total income is how much? 240. My total income is 240. And by the way, I don't have the opening receivable or opening advance. Why? Because we just started the business. We started the club this year. So given that we started the club this year, we don't have any opening balances. Agree? We started the club this year, so we don't have any opening balances. Okay? Because we didn't even do business last year. If we did business last year, we would have an opening balance here, but we don't have any. Okay? Right. So now I found out the opening income. Sorry, I found out the income. How did I find out the income? 500 is the monthly subscription. For 12 months, it's 6,000. 6,000 multiplied by 40 is 240,000, which is my subscription income from the normal members. Subscription income from the normal members. What are they looking for? They are looking for the cash. Right? So let's see what they got to say about closing receivable and closing advance. What do they tell us? Of the other 40 members, 10 members paid subscription for 10 months. 25 members paid for 12 months. And rest paid subscription for how many months? 18 months. Okay. Out of 40 members, 10 members paid subscription for 10 months. Okay. So 10 members paid for 10 months. So how many months of subscription remaining? 2 months of subscription remaining. For each month, they need to pay how much? 500. Right? How many members? 10 members. Understood the point? 10 members are there. They paid for 10 months. 10 members paid for 10 months. Then how many month subscription is pending? 2 months of subscription is pending. For 1 month, it's 500. So 2 months into 500 is 1,000. 1,000 into 10, you'll get 10,000. So 10,000 is actually my closing receivable. 10,000 is my closing receivable. Okay. And they're also saying 25 members paid for the entire 12 month. So we don't have any problem with them. They paid for the entire 12 month. And the rest paid for 18 month. So out of 40, 10 paid for 10 month. I took that out. Okay. So out of 40, 10 paid for 10 month gone. How much is left? 30 is left. Out of 30, 25 members paid for the entire 12 month. Fine. So there is no receivable. There is no payable. Right. So out of 30, if 25 is gone, 5 is left. This 5 paid for how many months? 18 months. So that's closing advance. Closing advance. How many members? 5 members. Okay. They should pay 500 a month. They should pay 500 a month. Who can tell me? For how many months did they pay in advance? For how many months did they pay in advance? They paid in total 18. Exactly. Very good. Very good. They paid for 6 months. Very good. They paid for 6 months. Right. So 500 into 6 months multiplied by 5, I get 15,000. I get 10,000 here. Right. Right. So 15,000 is my closing advance. 10,000 is my closing receivable. Now I can find out my cash. 240 plus 15. 255. Taken to the opposite side. 255. From 255, if I minus 10, what do I get? I get 245. 245,000 is cash from normal members. Cash from normal members. But there is lifetime membership as well. Okay. So I need to find out the cash from lifetime members. How much are they going to pay? They are saying in order to become a lifetime member, 15 years of subscription needs to be paid. How many lifetime members are there? 10. And they are saying in order to become a life member, 15 years of subscription should be paid at once in cash. Okay, right. So there are 10 members. Okay, for an year, the subscription is 6,000. Yearly subscription. Yeah, right. How did I get that? 500 into 12. 500 into 12 is 6,000. Simple. 500 into 12 is 6,000. So for an year, it's 6,000. They should pay for how many years? 15 years. They should pay for how many years? 15 years. So 6,000 into 15 is 90. 90 into 10 is going to be 900,000. So cash received through lifetime members is 900. So the total subscription we received during the year is 1145. Right. So this is basically total subscription received. And they are also asking for the total income for the month. Sorry, for the year. They are also asking for the total income for the year. We already found out the normal income. Normal subscription income is 240. I should find out the lifetime subscription income. How do I find out the lifetime subscription income? Very simple, right? They're saying this lifetime membership that we receive is going to be recognized equally over a period of how many years time? 15 years time. So how much did we receive? 900, right? It is in total 900. That is going to be divided for how many years? 15 years. So 900 divided by 15, I get 60. What do I get? 60. So what's my total subscription income? 300,000. So what's your answer? 300,000 is the total income. 1145 is the cash received. Do I have an answer as such? I guess I do. Right. 1145, 300,000. Your answer is first. Your answer is first one. Right. May I know how many of you got that 13 one correct? Adeniyamaya. Superb, 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 superb. Well done. Right. Cash flow. You'd love this question, trust me. This question is a very nice one. Okay. Right. Cash flow. What are they asking for? Net cash flow generated from operating activities for the year ended 31st March 2020. By reading this question, you can understand we are supposed to use the indirect method. We can't use the direct method. What are we supposed to use? We are supposed to use the indirect method. I hope you can remember how we use the indirect method to find out the cash flow. We start with profit before tax. We do adjustments. We do working capital adjustments. And then we minus the interest paid. And we also minus the income tax paid. If we do so, we can get our answer. Right. It's a nice question. Let's see how many of you got this correct. Huh? Right. First one. Income tax expense for the year was estimated as 1/3 of the profit before tax. Further, a land included in the property, plant and equipment resulted in a revaluation loss of 100. During the year ended 31st March 2020, what was the net cash flow generated from the operating activities for the year ended 31st March 2020? Answer me. I need the profit before tax. How can I get the profit before tax? Anyone? How can I get the profit before tax? How can I get the profit before tax? Give me the clue. Give me the clue. That's enough. Right. I need the retained earning. Right. To find out the profit before tax. Very good. Very good. What do I need? I need the retained earning. Right. Retained earning, we cannot have an opening balance because we just started the business. We will have a closing balance. And you know, profit after tax increases my retained earning. Dividend decreases my retained earning. Right. So according to this question, you can see there is no opening balance at the beginning because we just started the business. We just started the business, therefore there is no opening balance. The closing retained earning given is 800. Okay, and I'm obviously looking for the profit after tax. What are they looking for? I'm looking for this profit after tax. Then only I can find out the profit before tax. Do I have a dividend? Yes, we do. We have a dividend of how much? 200. If we have a dividend of 200, what was the profit after tax? The profit after tax is 1000. Right. After finding out the profit after tax, now I can find out the profit before tax. Profit after tax, profit before tax, the differentiating factor between these two is the income tax. Right. So the profit after tax is 1000. And they are saying if profit before tax is 3 shares, out of 3 share, income tax is 1 share, profit after tax is 2 share. Didn't they tell us? They did. Let me show you. They did. Let me show you. Income tax expense for the year was estimated as 1/3 of the profit before tax. Right? So if profit before tax is 3 shares, out of 3, 1/3 is income tax, 2/3 is profit after tax. Agree? Right. So if this 1000 is 2/3, if this 1000 is 2/3, okay, my income tax is going to be 1/3, right? 1/3 is how much? 500. Then what's my profit before tax? My profit before tax is 1500. What's my profit before tax? My profit before tax is 1500. Understood the point? Out of 3 share, if profit after tax is 2 share, then income tax is 1 share, right? So out of 3, if profit after tax is 2 share is equal to 1000. So 1000 divided by 2, 1 is going to be, so the total shares are going to be how much? 1500. So I have now found out my profit before tax. I've now found out my profit before tax. Now let's keep going. Let's keep going. So whatever that I took, I'm going to mark it. Income tax is done. Right? Now, leave the property, plant and equipment for now. Inventory. Increased or decreased? We just started the business, no? So at the beginning 0. Now it has become 300. So inventory has increased. Increase in inventory. So if inventory increase, what are we supposed to do? Decrease. Can you remember? If inventory increase, what are we supposed to do? We should decrease. Trade receivable also increased. Increase in trade receivable. It increased by 400. If it increased by 400, what are we supposed to do? We should decrease it. Okay, right. So let me show you what have I taken for now. Inventory taken, trade receivable taken, retained earning taken. Trade payable, from 0, it has become 500. So trade payable increased. Increase in trade payable. Right? It has become 500, right? If it has become 500, you should also increase. If liability goes up, you should also increase it. Direct relationship. Okay? Right. Now, what's the next step given? Trade payable also done. Income tax payable is 200. Income tax payable is 200. What's my income tax expense? My income tax expense is 500. Out of 500, 200 is payable. How much is paid? Simple, right? 300 is paid. How much is paid? 300 is paid. Right, amazing. Now, that's also done. Dividend paid is not relevant and I took it to, it is finance activity. But they are looking for the operational activity. Now, Rob. Property, plant and equipment resulted a revaluation loss of 100,000. Tell me, this 100,000, what should I do? Should I record it or should I skip it? Should I record it or should I skip it? Should I record it or should I skip it, that 100,000? Right. You know, when there is a revaluation loss, what do we do? I hope you can remember. Okay. When there is a revaluation loss, what do? We take that loss to the income statement. Okay. And we show that as an expense. Right. So now the profit before tax has come down. The profit before tax has come down. But you know it's a non-cash flow. Remember, there are 3 things we adjust: non-cash flow, duplication, and then what? Interest expense, right? So there's no interest expense, luckily. There is a revaluation loss. There is a revaluation loss of how much? 100. That 100 was deducted before. I should add it back. If someone asks, why did you do that? I would say it's a non-cash flow. I would say it's a non-cash flow. Remove it. Right. Guys, I have almost taken everything except one, which is property, plant and equipment. Look, the property, plant and equipment was 2000 at the beginning. It has become 1500. Tell me what's my depreciation. Tell me what's my depreciation. Tell me the value. Tell me the value of it. Let's be quick. Let's be quick. Okay. Wrong. It's not 500. It's 400. Very good, JD. It's not 500. That's where the twist is kept. That's where the twist is kept. That's why I asked you, what's the depreciation key? Guys, don't forget there is a revaluation loss. Do not forget there is a revaluation loss. PP opening balance is how much? 2000. Sorry, opening balance is 0. No, opening balance is 0. The closing balance is 2000, isn't it? Right? So, oh, I'm sorry. Why am I messing this up? Sorry. Opening balance is 2000. It has become 1500. I beg your pardon. Extremely sorry. Okay. Opening balance, we have a PP of 2000. Now it has become how much? 1500, right? Okay. PP has decreased for two things. First thing is revaluation loss. And there is also a what? Depreciation. We are finding out the depreciation, don't we? What are we trying to find out? We are trying to find out the depreciation. There is a revaluation loss. What's the revaluation loss? 100. And you know what does revaluation loss do to the PPE? Can't you remember? Revaluation loss will decrease the carrying value of the PPE. Revaluation loss will decrease the carrying value of the PPE. So out of 2000, 100 is the revaluation loss. Okay, after deducting the depreciation, it has become 1500. So what's my depreciation? My depreciation is 400. Do the reverse process. How do you do the reverse process? 1500 plus 100, 1600. 1600 minus 2000, it's 400. So my depreciation is 400. Now that's a question. What the MCQ? Okay, I don't want to tell this the hardest MCQ, but if you do this MCQ, past paper MCQ will become nothing. Look what we do, man. We did the retained earning, we did the PPE, we adjusted the revaluation loss, right? We did many things, and now that's a good MCQ. We did, right? Now I can get my final answer. 1500 plus 100 plus 400 minus 300 minus 400 plus 500 minus 300. My answer is 1.5 million. Net cash flow from operational activity. Net cash flow from operational activity. Tell me how many of you got that correct? I know many of you would have got it wrong. The answer is 1.5 million. That's a good question. That's a very good question. How many of you got that correct? Only Faz? How many of you got that wrong? How many of you got that wrong? Abadi Kepu. How many of you got that wrong? Okay. I think many of you got that wrong. Did you? Right. Forget about getting that correct. Forget about getting the answer correct. Did you all understand your mistakes? If you have to get a question similar to this, will you be able to do it correct the next time? I can believe in you, right? Sure. What happened to Zuha? Zuha, what was your answer? Correct or wrong? Afreen, no sound. Probably she might be sleeping. Fatima Salman, Rashida. Oh, I'm awake. Adugmattu answer. So I wasn't able to attempt the question. Okay. Is Fatima Salman here? Rashida, what happened? Okay, you couldn't attempt the question. I'm sorry, I'm sorry. I'm extremely sorry, guys. I couldn't actually put the paper earlier. Obviously, it was all a last minute preparation. I'll make sure that I send you the paper at least one day in advance next week, okay? So that you can keep it ready. Extremely sorry. Hope you don't mind. That's a blame that I need to take, okay? Right. The information given below relates to a manufacturing business for March 2020. Raw material purchase is given, direct labor is given, factory overhead is given, decrease in raw material given, increase in work in progress given, decrease in finished good given. What are they asking for? They're asking for the prime cost and they're also asking for the cost of sales. Okay. Right. That's a pretty simple question, isn't it? Let's be quick. We have another 5 more questions to go. Right. Raw material purchase is given, direct labor is given, factory overhead is given, decrease in raw material is given, increase in work in progress is given, decrease in finished good is given. Okay. You know what you should do? You got the opening raw material at the purchase minus the closing raw material. You get the raw material used. You add the direct labor. You add the direct other. You get the prime cost. To the prime cost, you add the production overheads. You add the opening work in progress. You minus the closing work in progress. You get the production cost. Production cost, you take to the income statement. You have the opening finished goods. You add the production cost to it. And you minus the closing finished goods. Right? What do you get? You get the cost of sales. What do you get? You get the cost of sales. Right. So now, what are they looking for? They're asking for the cost of sales and they're asking for the prime cost. They're asking for the cost of sales and what are they asking for? They're asking for the prime cost. So I've circled it, whatever that they are looking for. Right. Okay. So now the raw material purchase is given 1000. Raw material purchase given is 1000. Direct labor given 1200. Factory overhead given, which is production overhead, 1500. Elagiri. Right. Decrease in raw material. Tell me what should I do? Decrease in raw material 100. Tell me what should I do? Take a guess. Exactly. What should I do? Very good, Rukshana. I should take a guess, right? So I'm going to take a guess. I'll take 500. That's a guess figure. If I take a guess figure, right? If the opening is 500, right? Closing, it has decreased. The raw material has decreased by 100. So if opening is 500, the closing has decreased by 100. If opening is 500, the closing has decreased by 100. If closing has decreased by 100, what's my closing raw material? 400. What's my closing raw material? 400. So with that, I can get the raw material used. 500 plus 1000 minus 400, I get 1100. I get 1100. That's the raw material used, right? And I think there is no direct other expense. So 1100 plus 1200, it's going to be 2300. 2300 is my prime cost. 2300 is my prime cost. Now, the next thing that they are looking for, increase in work in progress 200. What am I going to do? Again, I'm going to take a guess and I'm going to take the same value, 500. Guess. What has happened? The opening work in progress has increased by 200. No, if it is increased by 200 compared to 500, it has increased by 200. So now, if opening is 500 and if the closing has increased by 200, the closing should be how much? 700. With this, I can get the production cost. 2300 plus 1500 plus 500 minus 700. I get 3600. 3600 is my production cost. Off it goes to the income statement. Right now, if I can adjust the finished good, I can get the cost of sales too. They are saying finished good has decreased. If work in progress decreases, I'll come down to it first. Okay, decrease in finished goods. Finished good has decreased. Again, I'll take the same guess, 500. Guess figure. So what has happened? The finished good has decreased. The finished good has decreased by how much? It has decreased by 300. So if opening is 500 and if the finished good is decreased by 300, the closing finished good is how much? 200. Now I can get the final answer. 500 plus 3600 minus 200. My answer is 3900. So the final answer for prime cost is 2300. For cost of sales is 3900. Do we have an answer as such? I guess we do. 3900 to 2300. The answer is fifth. The answer is fifth. Tell me how many of you got that correct? Yes. A quick guess here. Very good. Very good. Well done. Well done. I'm sorry, guys. Next time I will make sure that I send the question a little earlier. I shouldn't have done it. Next time I'm going to give you a paper that will make you cry. That's my plan. Okay, right. Next question. A manufacturing company incurred the following costs during the month of March 2020. Again, some expenses are given and they want us to find out the product cost and period cost. Product cost and period cost. Okay, what's a product cost? What's a period cost? I'll explain you very simple. Simple thing. Okay. Can you remember when I was teaching you manufacturing, cost can be divided into two. How do you divide the cost? You all know. Cost can be divided as production cost. And it can also be divided as what? Non-production cost. Non-production costs are of four types. What are those? Distribution, administration, other, finance. Production costs are of two types. Direct cost, indirect cost. Right? So distribution, admin, other, and finance. These are what? Non-production cost. What are these? These are non-production cost. And by the way, non-production costs are also known as what cost? Period cost. Non-production costs are also known as what? Period cost. So alternatively, keep in mind, non-production cost has an alternative name. What do you call it? You call it the period cost. Non-production cost has an alternative name. What do you call it? You call it the period cost. Okay, right. Okay, Puta. Now, let's pick it up. Raw material used, production cost. Production, pro. Direct labor, production cost. Production loyalty, production cost. Factory rent, production cost. Machinery depreciation, production cost. Administrative overhead, period cost. Sales and marketing expense, period cost. Okay, the reason why I included this question, because when the examiner used the term period cost, do not be worried, do not be upset, do not be confused. They are actually referring to the non-production cost. What are they referring to? They are referring to the non-production cost. Raw material use, direct labor, production loyalty, factory rent, machinery depreciation. These all what cost? Production cost. Okay, so the other two are non-production. So the non-production cost in total is 2,800, 5,000, 1,000, 1,500, 500 plus 1,000. My production cost is 9,000. My production cost is 9,000. My period cost is 2,800. Right. So do I have an answer? 9,000, 2,800. Indeed, I have an answer. What's my answer? My answer is third. What's my answer? My answer is third. Right. Perfect. Guys, any doubts with the 16th? Are we clean? Any problem? Learned what's a period cost now, yeah? You know what's a period cost, don't you? Niyamai. Niyamaya. Okay. Just stick to me for some time. I'm gonna be finishing these off as quick as possible. Okay. Right. Next one. Mihira PLC financial statement for the year ending 31st March 2020 were authorized by its directors on 30th 5 2020. The annual general meeting of the company was held on 10 6 2020. The following events took place in the company after 31st March 2020. Which of the above events should be adjusted? Okay, A. An announcement of a plan to discontinue the operation of a business unit which was incurring a losses continuously. An announcement adjusting or non-adjusting. AON. AON. What do you think? Is that AON? It's non-adjusting. It's non-adjusting. Bankruptcy of a debtor on 15/6/2020 who owed a substantial amount as the balance sheet date. Finish it. Adjusting or non-adjusting? B. B, adjusting or non-adjusting? I want all of you to answer. Adjusting or non-adjusting? Be quick. Right. It is. Right. Some of you are saying non-adjusting. Some of you are saying adjusting. Why non-adjusting? Why put on non-adjusting? Very good. Don't just I don't know. Some of you, I have no idea how many times I would have reiterated on this. Puta, pay attention to the date. For God's sake, pay attention to the date. Okay, don't try to, what do you call, skim through the paragraph and come to a conclusion. Here, look what has happened. He went bankrupt on 15/6. Directors authorized it on 30th 5. So he went bankrupt after directors authorization. So if he went bankrupt after director's authorization, you can't do anything. So it's non-adjusting. Aparadino, those who said adjusting. You are not actually looking at the date. Okay, if you do not look at the date, actually you are losing big time. Huh? Aparade. Okay, make sure that doesn't happen again. Date case param. Exactly, Arham. Okay. The judgment of a court case was delivered on 25/5/2020, confirming a liability of 1 million as of 31st March 2020. Adjusting or non-adjusting? No, that's adjusting. That's adjusting. Okay. Here, he was existing at the balance sheet. He was there at the end of the year. Hafsa, he was there at the end of the year. But he went bankrupt after directors authorizing the financial statement. You know, after directors authorize the financial statement, you can't do anything. You are late. Okay. You are not late if this has happened before the director's authorization. But it happened after. So you are late, you can't do anything. Right. D, a decline in the short market investment, guys. Market investment decline vanega non-adjusting. Market investment decline vanega non-adjusting. Inventory with a cost of 600 was sold for 500. So there is a loss of 100. Okay. When did you sell it? On 25th 4, which was existing on 31st March 2020, adjusting. So what's your answer? Answer C and E only. What's your answer? Answer C and E only. Right. If it is after date, Harish, we can't do anything. If it is after date, we can't adjust it. We have to put it on the next year's financial statement. This year financial statement, we can't do anything. Right. Your answer is 4th. How many of you got that one correct? Let me be quick to see. Niyamai, yeah. Superb. Now, use the following information of an entity relating to an item of inventory to answer question number 18 and 19. Last 3 questions. Stick to me. I'm going to finish it off and let you all go home nicely and happily. Right. This is related to FIFO and WAC. Okay. Use the following information of an entity, blah, blah, blah. They've given us the balance, sales, purchase. During the month of March, the company made a total sales of 135,000. There were no changes in the selling price. The subsequent sale was made on 25/3/2020. The company uses fest in, fest out method to price the inventory issues. The NRV as of 31st March 2020 is 210. Okay, that's a good question by the way. It's a very good MCQ. Right. Listen, Puta. We had a balance at the beginning. We sold, we bought, and we also made a sales again that they haven't quantified. We have made a sales again on 25th March. We have made a sales, but they have not told anything about it. What are we supposed to do? We should find that out. Right. Now we need to find out the cost and the carrying amount based on FIFO. Based on FIFO, what are we supposed to do? We should find out the cost and carrying amount. Okay, that's a simple thing. We can work that out. You know how fest in, fest out works. Okay. So this is a part 1 question. So don't waste your time. Just put in and balance. Just put in and balance. In, you got the quantity, price and value. Quantity, price and value. Here I'm using the fest in, fest out method, don't I? Okay. At the beginning, I have 40,000 value. The quantity is 200 units. If so, my price is 200. If so, my price is 200. Right. Then I sell. Okay, how many units am I selling? 100. So how many quantities going out? 100 quantities going out. 200 each. 20,000 worth of inventory goes out. If 20,000 worth of inventory goes out, how much is left? Out of 200, 100 is gone. Out of 200, if 100 is gone, 100 is left. 200, 20,000. Are we clear? Right. Now we are purchasing. Okay. The total value, when we purchase, obviously the value increases. We get another batch. 44,000. Quantity is 200. So I can find out the price. How do I find out the price? 44,000 divided by 200. The price is 220. Now I have 2 batches. Batch 1, 2. Batch second. Again I'm purchasing for 24,000. Quantity given is 100. So what's the price? 240. So how many batches do I have? I've got 3 batches now. Batch 1, batch 2, batch 3. Again, I'm making a sales, but I don't know the quantity of it. Again, I'm making a sales. I don't know the quantity of it. Neither do I know the value of it. Okay. How do I find that out? How do I find that out? That's the question, right? Look at this. It's a nice question. We can actually work it out with the additional information given. During the month of March, the company made a total sales of 135. And there were no changes in the selling price. Okay. Total sales kiya 135,000. Out of 135,000, 30,000 we know that sales. When did that happen? That 30,000 worth of sales happened in March 3rd. When did it happen? March 3rd, 2020. Another sale is happening on 25th March 20. Now, can I find that out? It's very simple, right? Out of 135, if 135,000 is the total sales, out of 135,000, if 30,000 worth of sale is done on 3/3, how much is done on 25/3? 105,000. How much is done on 25/3? 105,000. Now this 105,000 is the total sales, right? I need the units. And he's saying the selling price does not change. There were no changes in the selling price. So can I get the selling price here? I can write. What's the sales value? 30,000. The sales value is 30,000. What's the sales unit? 100. Okay. So if 30,000 is the sales value, if 100 is the sales units, what's the price? The price is 300. What's the price? The price is 300. So if the price is 300 here also the price should be 300. Why? They are saying there were no changes in the selling price. We made a total sales of 135. The selling price didn't change. So here also the price is 300. So can I find out the number of inventories upsold? I can write. What should I do? 105,000 is the total sales divided by 300. How many units have I sold? I have sold 350 units. Guys, how many of you understood that 350? How many of you understood the 350, please? Right. Only few people responding, but there is about 70 plus kids in the class. Can I at least have a kind gesture of saying, sir, I understood? If not, sir, I didn't understand. Right. If you do not understand it, then it's my responsibility to re-explain it to you. That's why I asked you. Okay, if you do not understand it, please ask it. Okay, I know that is a tough part to understand. Listen to me. Guys, we have made a total sales. Hear me. We've made a total sales of 135,000. Okay. This 135,000 consists of two sales. One sale was happened on March 3rd. The other sale was happened on 25th March. Okay. The sales happened on March 3rd was given. All the details related to the sales happened on March 3rd is given. But the sales made on 25th March, we have no idea. We need to find that out. Now, that's a pretty simple one. Sales made on March 3rd was 30,000. They have given us the value. If you take a look at the table, in the table they have given the sales made on March 3rd, the value of it is 30,000. Okay. So if the total sales is 135, out of 135, if 30 is the sales made on March 3rd, the remaining 105,000 is the sales that would have been made on 25th March. That's common sense. If the total sales is 135, in March 3rd, if the sales is 30, then on 25th March, what's the sales? It's 105,000. Okay. Now I should also find out the units. No, I should also find out the units. They are saying the price hasn't changed. The price has not changed. So let's say this is the price and this is the units. Okay. I can easily find out the price. Do you know why? Here, look, Puta. The value is 30,000. The unit is 100, right? With that, I can find out the price, no? Right? Units 100. Value is 30,000. Then what's the price? The price is 300. And they are saying the price hasn't changed. The price hasn't changed. In both the sales, the price is the same. Okay? So if the sales made in March 3rd, if it is made for a price of 300, in 25th March also, we made the same sale at the same price. Right? Now I can get the units. 105,000 divided by 3. Here I get how many units? 350 units. How many units have I sold? 350 units. Okay, so how did I come to that? From 135, I found out the 30. Using the 30, I found out 105. Using this 30, I found out the sales, the selling price, right? And then from this, I extrapolated the selling price of this sale. And from this, I found out the 350. Are we okay with it? Those who said you couldn't understand, are you all with me now? I guess you are fine, yeah? Okay, okay. Rukshana, Nuzha, Mahdi, are you okay? Faz, Fatima. I guess you guys are fine, yeah? Right. So now I found out how many units am I selling? 350, right? If I'm selling 350, I'm going to go first in, first out. 100 goes out first. 100 goes out first. Each at 200. Then the remaining 200 goes out from the second batch. Each at 20, 44,000. Me from this batch, how many units should I dispatch from the last batch? Be quick, put it on the chat box. How many units should I dispatch from the last batch? Exactly. I should dispatch 50. 50 is going to be dispatched at the price of 240. So 12,000 is the value. So out of 100, 100 gone, 200 gone, out of 100, 50 is gone. How much is left? 50 is left. 240 is the price. 12,000 is the closing inventory according to FIFO. 12,000 is the closing inventory according to FIFO. Right. And now they are saying, find out the carrying amount as well. Right. What's the cost? Cost is 210, 240. Cost is 240. What's the NRV? NRV is 210. How many units are there? 50 units, right? So 240 into 50 is 12,000. 210 into 50. What's the total NRV? 210 into 50. 10,500. Now tell me. According to FIFO, the cost of the closing inventory is 12,000. But in SOFP, are you going to show 12,000 or 10,500? In SOFP, are you going to show 12,000 or 10,500? Yes. Exactly. In SOFP, you are going to show 10,500. Why? Because there is going to be an NRV loss. How much is the NRV loss? The NRV loss is 1,500. So out of 12,000, if there is going to be an NRV loss of 1,500, then how much am I going to show in SOFP? I'm going to show 10,500 in SOFP, which is my carrying amount. So now everything has been finalized. Let's get the answer. What's your answer? 12,000 is the cost. 10,500 is the carrying amount. Your answer is third. That's a nice question, isn't it? That's a good question with a lot of learning. That's a good question with a lot of learning. I hope we are clear. Are we? Guys, are we okay with it? Good. Right, guys, let's move to the next question. Now they want us to use what? WACC. What do they want us to use? WACC. And they're asking, if we use WACC, what's the cost of the inventory and what's the gross profit? Okay. Now I'm going to use WACC. If I use WACC, guess what? If I use WACC, only this part changes. Only the last part changes. The rest remains the same. Okay. Right. I'll keep it written on the board because if not, you will have no time to copy it down, right? So balance QPV. Here also balance the QPV. I wish I could do it from the last point, but I don't want any one of you to miss out things. Okay. Right. I wish I could do right from here, but I don't know. There can be some students learning from the scratch. So I'm thinking of those students. We'll start from the beginning, but no, when you do the MCQ, you are not going to start from the beginning. You'll only do the latter part of the question and get it done. Okay. But given that we are learning this MCQ for the very first time, I would like to walk you through the entire scenario one last time. Right. Initially, how many? We got 200 units. 200 is the price. 40,000 is the value. Then out of that, how many units are we selling? 100 units. 200 is the price. 20,000. Guys, I don't need to calculate WACC. I don't need to calculate WACC here. Why don't I need to calculate WACC here? Because there is no average now. There is only one set of inventory. So I don't need to calculate the average. That's quite obvious, right? So out of 200, if 100 is gone, 100 is left, 200 is the price, 20,000 is the value. Let me tell you one last time. Man, when you send, you're using WACC, but you don't need to calculate the WACC here because we just got one batch. One batch will average. So you just take the 200 and work it out. Now you buy another set of inventory, the same thing. 200 inventory, 220, 44,000. 240, 24,000. Right. Now we are using WACC. If we use WACC, you know what we are supposed to do. How many inventories are we sending off? Don't forget. We are sending off 350 inventories. That's something we already found out in the previous question. And you know how we arrived at this 350, right? Now we are sending off 350. The 350, we are going to send it using what? WACC. The 350, we are going to send it using WACC. And can you remember how do you get the WACC? You know how to get the WACC, right? Total value divided by the total quantity. Total value divided by the total quantity, right? Now let me get the WACC here. Total value 20 plus 44 plus 24. Right. Total value 20 plus 44 plus 24. The total value is 88,000. Divided by the total quantity 400. So 88,000 divided by 400. What do you get? 220. 220 is the WACC. So 350 multiplied by 220. The amount that you're actually sending is how much? 77,000. The amount that you're actually sending is how much? 77,000. So out of 400, out of 100, 300, yeah, out of 400, 350 is gone. How much is left? 50 is left. Now this 50 is going to be valued at 220. Don't forget, that's the new WACC. That's the new price. Okay, the closing inventory is going to be valued at the new WACC, the new price, new weighted average cost. So 50 into 220, what do you get? 11,000. Right. What are they asking for? They're asking for the cost. I already found out 11,000. And what's the cost of gross profit? The gross profit is 38,000. I'll again show you the gross profit too. Don't worry. I'll show you the gross profit too. Okay. The cost of the inventory, I found out how much is it? 11,000. The cost of the inventory, I found out how much is it? 11,000. I'll show you how to get the gross profit. You get the sales and you minus the cost of sales, right? What's the sales? 135,000 is the sales. From 135,000, I should minus the cost of sales, right? Who can tell me what's my cost of sales? If you are smart, tell me. Just stick to me. Another question and we are done. Who can tell me what's the cost of sales? Very good. My cost of sales is 97,000. How come it becomes 77? Ade, this is not right. Huh? Did you forget this one? This was also a salesman. This was also a sales. This was also a sales. So what's my total cost of sales? My total cost of sales is 20 plus 77. How much is it? 97,000. Jadi. Don't forget this. This was also a sales. This was a sales and this was also a sales. 20 plus 77, it's 97. Right? So 135 minus 97, 38,000 is your answer. And I showed you the 38,000 too. Now that's one hell of an MCQ. Now you understand. This is what I'm saying. There is no point of doing 10 MCQs because those 10 MCQs are equivalent to an MCQ like this. This is where you get better. This is why the speed run is all about. I think the Candy people know the amount of, how do I say? The Candy people should know how much I would have been drained by now. Okay. Started at 7:30, 8:30, 9:30, 10:30, 12:30, 1:30, 2:30, 3:30, 4:30, 5:30, 6:30, 5:30, 9 hours. Started at 9, 10, 11, 12, 1. That's almost 12, no, that's almost 14 hours of teaching. How many hours of teaching? 14 hours of teaching. Yeah, I don't normally create sympathy saying, I put a lot of effort to you and blah, blah, blah. I hope you value this. That's all I can say. I hope you can value my effort. That's all. Obviously, man. Right. Get myself an A. That's all I want. And again, tomorrow, 5:30, I need to wake up. Whole day I've got classes. It's a never-ending war. What to do, Anna? That's how life is. 20th. Right. The following information relates to a machinery owned by a firm. Cost of the machine is given 5,000. Accumulated depreciation is given 2,000. Gain on disposal of the machinery is given 200. Purchase of machinery is given 1/1/2020. The disposed machinery was purchased on 1/10/17 at a cost of 1,000. Machineries are depreciated at 20% per annum on cost on straight line method. What is the accumulated depreciation balance as of 31st March 2020 and sales proceed from disposal of machinery? Right. How do you work this out? How do you work this out? The last question for the day. Can someone tell me how can we work this out? Disposal account, PPT account. Okay, you do a PP account based on the cost or carrying value. Okay, you do this simple. Work it out using the PP note, right? Work it out using the PP note. You'll get your opening balance. And yes, indeed, whatever that you said is correct. I'm going to do the same thing. Right. So now, can you remember in the PP note, we got the opening balance. If there is a purchase, you add. If there is a disposal, you minus. If there is a revaluation, you can either plus or minus. If there is an adjustment, you minus. And what do you get? You get the closing balance. And that's, by the way, the cost. Right? Okay. Right. The machine cost at the end is 5,000. Right? Okay. We have purchased the machinery 1,500. We also disposed the machinery for 1,000. Then what's my opening balance? 5,000 plus 1,000, 6,000. 6,000 minus 1,500, my opening balance would have been 4,500. Am I correct? Yeah. Right. And then what do you minus? You minus the accumulated depreciation, don't you? How do you get the accumulated depreciation? Opening balance at the depreciation charge, and then minus the disposal, and then minus the adjustment, and you get the closing balance. And finally, you get the carrying value. It's the PP note. Okay, right. And they have given me the opening accumulated depreciation. The opening accumulated depreciation is 2,000. Okay, right. Now, what they want us to find out, the disposal proceed. Okay, let's work on the disposal now. You take the cost minus the accumulated depreciation, you get the carrying value. Compare the carrying value against the cash, you'll get the gain or loss. What are they looking for? They are looking for the cash. They want us to find this out. Right? What's the cost of the machine? The asset that was disposed was bought for 1,000. When did you buy it? You bought it on 110.17. When did you buy it? You bought it on 110.17. Right. When are you selling it? You're selling it on 110.19. It's given on the question. Check. When are you selling it? You're selling it on 110.19. In case if any of you are wondering here, you're selling it on 110.19. Okay. Right. So if we have to sell it on 110.19, for how many years are we supposed to calculate depreciation? For 2 years, right? 1890. For how many years? 2 years. 1890. So for 1,000, 20% is depreciation per annum, multiplied for 2 years. Prorated for 2 years. 1,000 is the cost. 20% is annual depreciation. 1,000 multiplied by 20% is 200. But we need to prorate it for 2 years. So the accumulated depreciation is 400. Right? So by the time you dispose the asset, the carrying value of the asset is 600. By the time you dispose the asset, the carrying value of the asset is 600. I need to find out the cash. To find out the cash, we need to check whether there is a gain or loss. Right? Is there a gain or loss? There is a gain. How much is there? There is a gain of 200. So what is the cash we received by disposing the asset? 800. What is the cash did we receive by disposing the asset? 800. Now they are also asking for what? Accumulated depreciation at the end. So they want us to find this out. accumulated balance at the end, right? So tell me the step. Although you don't need it, but let me work it out for you. You don't need it. Remove the cost, remove the accumulated depreciation. Cost, can you remember the steps of disposal, right? Remove the cost, removed it. Remove the accumulated depreciation, right? I removed the accumulated depreciation too. Perfect. Now, I should find out the depreciation charge in order to find out the closing accumulated depreciation. When it comes to depreciation, I got three things: new asset, old asset, balance asset. New asset, when did I purchase it? New asset, I purchased it on 1/1/2020. Tell me, for how many months should I depreciate this 1,500? Tell me, for how many months should I depreciate this 1,500? 1,500 into 20%? Depreciate it for how many months? Bought it on 1/1. They want us to find out the year end is 31st March 2020. Bought it on 1/1. Tell me, for how many months am I supposed to depreciate it? Yes, 3 months. Exactly. So whatever the answer you get, divided by 12 months, multiplied by 3 months, right? So 1,500 into 20%, that's 300, divided by 12, multiplied by 3, that's 75,000. Old asset, we are disposing it on 110. We are disposing the old asset on 110. The cost of the old asset is 20%. Tell me, for how many months should I prorate it? Be quick. For how many months should I prorate it? Very good, Izza. Well done, Ibrahim. Well done. We should prorate it for 6 months. Why? Because our year starts on 1/4/19. We are selling it on 1/10/19. How long has it been? 6 months. So whatever the answer I get, divided by 12 months, multiplied by 6 months. So 1,000 into 20% is 200. 200 prorated for 6 months is going to be 100. Now I got the balance. How do I get the balance? Out of 4,500, 1,000 is disposed. Out of 4,500, if 1,000 is disposed, out of 4,500, if 1,000 is disposed, how much is left? 3,500 is left. 3,500 into 20%. Shall I ask you a question? Do you prorate it or you don't prorate it? Prorate or don't? Don't prorate it for 12 months, because whatever the balance asset, we had it for the entire year, right? Whatever the balance asset, we had it for the entire year. So 3,500 into 20%, that gets me how much? 700. So it's 875. Okay, so 875 is the depreciation charge. Now I can get the closing accumulated depreciation. 2875 minus 400, 2475. So your answer is 800 and 2475. Do we have an answer as such? Okay, the answer is second. The answer is second. There you go. That's again a nice question. It's again a beautiful question. Right? That's all, man. Okay. How did the session go? Did you all enjoy it? Can I get some feedbacks? It's almost 1 o'clock. Happy Danish. If you got some new learnings, I'm really glad. Really glad. Patta worth it. Thanks, man. Thanks, man. Sattavadi. Great question, sir. Would have cried in class had you given this as a revision paper. Aniyayam. I could have made you all do the paper, man. Shit. Okay, நிறைய விஷயங்கள் படிச்சேன். Happy.